is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from our Bloomberg Interactive Brokers studio, streaming on YouTube. It is Thursday, Friday's Eve, February 25th, 2021. Here we go again. Tech shares under pressure. And just on our final planning call, just before we got into the studio, you're like, whoa, check out that bond market.
Yeah, the yield on the 10-year spiking. What a difference just a few weeks makes.
10-year yield, 1.5%. So we're going to dig into that. We're going to unpack the tech trade. And then there's GameStop, up again 100%.
It's happening again, Carol. It started happening yesterday a little after 3 o'clock. We're going to dig into that. Why exactly? It's different maybe this time around.
If it is, I don't know. Maybe it is. Deja vu all over again. All right, let's get you going on this Thursday with a check on the trading day. Here is Charlie Pellet.
All right, I thank you very much. A lot going on. Got to keep it locked into Bloomberg Radio, see where we wind up today, and, of course, how Asian markets react tonight. You mentioned GameStop, indeed, surging today, up right now by about 67%. But not just GameStop, some of the other Reddit names. Costcorp up right now by 49%. AMC Entertainment up now by just about 6.5%. Right to the numbers, we'll give you the why in a moment. The most critical number, 10-year yield, now 1.47%. S&P down 78, drop there of 2%. We've got the Dow down 431, down by 1.3%. Worst level of the day, by the way. The Dow was down 590, down 1.9%. NASDAQ is slumping 368 points, a drop there of 2.71%. Tech shares leading a rout in U.S. stocks. The sell-off in global bonds deepening today. Benchmark Treasury yield spiking to a one-year high. Debt from the U.K. to Australia coming under pressure. Gold lower by 1.3%, $17.79 the ounce. West Texas Intermediate crude virtually flat on the day now, $63.21 for a barrel of West Texas Intermediate crude. After the bell, we will be hearing from Salesforce.com, Airbnb, DoorDash, Autodesk, and HP Inc., among many others. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. It's now time to set the Bloomberg Business Week agenda. Let's start with the Market Drivers Report. All right, and with us to do that, taking a look at both the day's economic news, the bond trade, and the equity trade, is Bloomberg News International Economics and Policy correspondent Mike McKee on the phone in New York. Bloomberg Stocks editor Dave Wilson, he is on the remote access in New Jersey. And Dave, I do want to start with you. Equities, Charlie, breaking down the basic numbers. We're coming off our lows, but tech once again down big time.
Absolutely the worst performing industry group among the 10 main ones or 11 actually, in the S&P 500. And right behind that, you see consumer discretionary, which includes Amazon.com and Tesla. Certainly a couple of stocks that fit into the big tech category. Then there's communication services with Google's owner Alphabet and Facebook driving that group down. And yeah, I mean, it's a pretty broad-based decline, no question. Just looking at individual stocks, it's getting kind of hard to find any that are up. There's only one up for every 9 down in the S&P 500. Twitter, kind of a notable exception, I guess.
Wait. Don't do Twitter yet. Don't do Twitter, because I know we need to bring in Mike.
Yeah, Mike McKee, come on in here and talk about what the heck is going on in the bond market right now.
Have 140 characters to talk about it?
You can have more. You can go.
Well,
you can do a thread. You can do a tweet thread here, okay?
It basically appears that people in the bond market have decided that we're going to have a faster recovery and perhaps more inflation than the Fed is ready for, and so they want to get out. They want to sell off, especially duration at this point. You don't see very much happening in the short end of the curve, which the Fed is pinned, but the longer end, they're moving. We had a terrible 7-year auction. I'm sure you've been talking about that, but right. I mean, it tailed by 4.4 points, and the big cover, the lowest ever that shows up in our data today. So there's really some reluctance to get into the longer end right now. Now the question is this an overdone reaction? And that we may see this slow down a little bit. That seems to be the prediction.
Listen, Mike, the thing we all want to know is the bond market, telling us something that we need to be concerned about, and that it's now starting to play out in the equity markets? Or do you still feel like, listen, things are under control, everyone, rates are still low, the Fed kind of covered this, and this isn't going to surprise them, the Fed, necessarily, this move in that 10-year?
It isn't going to surprise the Fed. They worry more about the speed of what's happening than they do about the direction. They expect that rates will go up because the economy is going to recover. And certainly they can change their mind at some point if they think it's creating inflation. But I think what you're seeing is, we had a 0.5% 10-year rate in August. And this is not a 0.5% kind of environment now, and certainly won't be in a couple of months as the economy opens up again. So markets are repricing, and then you're just getting a little bit of a momentum trade. You get some convexity selling built in. You get some basically individuals doing what's best for them that add up to what appears to be a bad move. Now the question is, have we rationalized at this point? Has the market cleared? There doesn't seem to be a whole lot of reason to think that we should go a whole lot higher. We will get some PCE inflation numbers tomorrow. And I suppose if we get through that okay, then maybe we hold for the weekend.
Hey, Mike, real quick, while we have you, the jobless claims numbers that we got this morning, beating expectations, how does that play into today's story?
Well, it's hard to tell because we all know that there are a lot of problems with these numbers. I mean, it's an interesting day to have a deceptive number come out. We had a holiday last week, and of course, the Texas, Kansas, Oklahoma, that whole area shut down because of the weather. Nobody was going to go out in that ice storm and file jobless claims. So we have a big drop in claims that will probably be partially reversed next week. And the thing to keep in mind is even with today's number, 730,000, you're still well above the highest we ever got during the great financial crisis.
All right, Dave.
Good context.
Yeah, exactly. Hey, Dave, come on back in on, because I do think we have to watch the equity and obviously the bond market in tandem here and try to get an idea of who's onto something.
Yeah, absolutely. And what's particularly noteworthy is that we saw the 10-year yield go above 1.5%. And why that matters?
Right.
When you look at the S&P 500 dividend yield, it's 1.5%. So one of the arguments for TINA over the past few years, the idea that there's no alternative to stocks, had been that yields were so low, you might as well pick up some income in the equity markets. So if that starts to go away, maybe it does change the equation, at least to some extent, for investors in terms of buying stocks versus bonds. So that's going to be something to watch.
Okay, you were talking about Twitter before because they're having a big day today with a lot of announcements. What are you watching with Twitter?
Well, it's a matter of their outlook. I mean, the way that they're talking, they really do expect their business to pick up in the next few years. And, that's gotten people a bit excited, shall we say. The idea that they're looking to double annual revenue by 2023, that they want to increase the number of users by about 20% annually over the next 3 years. I mean, so there's still some growth to be had, and that's the sort of thing that gets people excited, and so we've seen Twitter shares move up as a result of that. Best performers in the S&P 500 right now with a gain of about 7%.
Just going to say, there's one thing, setting a target. I want to win $1 million, $1 billion and buy an island, but there's one thing setting them and then actually fulfilling them, right?
That's the hard part.
That is the hard part. All right, Dave Wilson will be back a little bit later on with his chart and stock of the day. Meme Stock Mania, it's back.
It's back. Is it different this time?
Oh, I like how your voice went up there. It's
I
very
don't know
Bobby
the
Brady.
I don't know what's going on here, Carol. This was really shocking yesterday. It's continuing to be shocking today. The big question, why is it happening?
Was it Bobby or Peter? I think it was Peter Brady, right?
I don't know. Carol's, I'm not going to be able to help you here.
All right, so we're going to talk about that. We're also going to hear from Glenn Hutchins, the state of digital assets. Warren Buffett, we have not heard from him a lot, but his annual shareholder letter comes out this weekend. So we're going to get to that. Let's do the Bloomberg Business Week bite of the day. One number that tells us a lot. Take it away, Tim.
Today's number is 52 million. Disney, Facebook, and Google are involved in a massive vaccine education campaign that launches today. The $52 million It's Up to You drive will emphasize immunization as the key to resuming life. Ads are going to run on TV, radio, and social media. It's going to focus on the 40% of U.S. adults who say they're open but uncertain or skeptical about taking the vaccine.
Very interesting, and good that we're seeing, private sector get involved.
Yeah, it's something we've talked a lot to doctors about. And it does seem like once people start getting vaccinated in their orbit, more and more people will get vaccinated.
Exactly. All right, let's get to world and national news. A lot going on. Over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. Well, the U.S. has passed the 50 million mark for vaccines. Today, Vice President Kamala Harris spent the morning visiting a pharmacy in Washington to promote the partnership the government has set up with local pharmacies for getting more shots into arms. She also discussed vaccine hesitancy with the pharmacist.
You're administering vaccines here in the grocery store, in the pharmacy of the grocery store, and you're also going out to community and administering vaccines there as well.
And I think that's where a lot of the apprehension and the conversations need to be addressed, is reaching out to community partners.
The administration says roughly 7,000 retail pharmacies are participating in the administration's vaccination program. Well, as for the vaccines themselves, Pfizer recommends 2 shots for its vaccine to work. But what if you got 3? Bloomberg's Amy Morris has more.
Pfizer and partner BioNTech have launched a clinical study to see if a 3rd shot of their vaccine can stimulate stronger immune responses against new variants. The trial will examine safety and immune responses of a 3rd dose in as many as 144 people. They'll get that 3rd shot about 6 to 12 months after the initial 2 doses. They're also prepared to start a human study of another vaccine specific to the South African variant of the virus. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, the Manhattan District Attorney's Office has reportedly obtained former President Trump's tax returns totaling millions of pages. That's according to a report from CNN. A Supreme Court ruling earlier this week made those records available to the DA's office. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So stories that tend to trend high on the Bloomberg has to do with Wall Street firms and what they have to say about coming back to work. And yesterday we had a great story. David Solomon, head of Goldman Sachs, saying that, or actually warning that remote work is kind of an aberration. It is not the new normal. He said, this is not ideal for us. It's not a new normal. He said this at a Credit Suisse Group AG conference. It's an aberration that we are going to correct as quickly as possible. Speaking of Credit Suisse.
Yeah, that's right. Speaking of Credit Suisse, guess what? Credit Suisse hopes to bring workers back as fatigue mounts. The bank says that employees miss seeing each other and their clients. I think that makes sense, Carol. We've talked about this a lot. I think that work from home works for a lot of people. It works for a lot of different types of firms. We've talked to some executives who were in the process of moving to remote work at certain times before the pandemic even began.
Right.
And that's accelerated during the pandemic. But it doesn't sound like it's working for a lot of Wall Street banks.
No, and listen, from my own experience, kind of love being home for a long time. And I think there are days where you might want a little bit of flexibility if you don't have to be in the office. But there is something about being at home base, around your colleagues. You run into something, you're like, oh yeah, we got to talk about that. There's just something different. I also think having that delineation between home and work, there's something to be said for that.
You know, Marriott International CEO on our show yesterday talking about business travel. And I think about this in the context of not just returning to work, but also what it means to go from having meetings with clients over Zoom or Google Meet or whatever to actually having dinner with these clients and being there in person. Like, there is a big difference to that, I think. And maybe things won't recover to where they were in 2019 for a long time. But I think there will be a large portion of people who want to go back to something that is more hybrid.
Yeah, and listen, you know, the head of Credit Suisse saying there's only so many Zoom calls you can do with people, and I do think there is something lost. But listen, I also do think that workplaces, employers are going to say, do you really need to get on a plane for that meeting? Because it sounds like it's a 20-minute phone call and you guys can figure it out.
Yeah, exactly. And it's a lot cheaper.
A lot cheaper. Anyways, time will tell how it all plays out. You're listening to Bloomberg Business Week, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. Treasury yield surged past 1.6%, sounding the alarm for risk assets. Right now, we do have the 10-year at 1.47%. The Dow, the S&P, NASDAQ, all declining off session lows right to the numbers. S&P down 60 now, a drop of 1.5%. The Dow's down 337, lower now by 1.1%. NASDAQ is down 296 points, down 2.2%. At the worst level of the day, NASDAQ have been down 488, down 3.6%. Technology shares leading the rout in U.S. stocks today. We've got gold down 1.6%, $17.75 the ounce. West Texas Intermediate crude, $63.43 a barrel, up by 0.3%. NASDAQ 100 index on track for the biggest drop since October. Right now, that index is down 2.3%. Lots of earnings after the closing bell today. Among some of the names, Airbnb, DoorDash, Autodesk, HP Inc., and Salesforce.com. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a bunch of COVID and vaccine headlines. Pfizer and BioNTech's COVID-19 vaccine overwhelmingly effective against the virus in a study that followed more than 1 million people in Israel, Tim. Results that public health experts say show that immunizations could end the pandemic. That's a big one.
That's a big one. Ruth Vaden is joining us now, founder of the Johns Hopkins Berman Institute of Bioethics, professor of biomedical ethics at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Ruth, thanks for joining us on this. What did you make of this news that we got from Israel? I mean, this is pretty fantastic, right?
It's extremely happy making. So these are the findings.
I like happy making.
It is very happy making. I mean, that was the way I when I saw this stuff yesterday, I was just like, yay. What this establishes is that the vaccine works truly in the real world. So there is this difference that epidemiologists and vaccinologists make between efficacy, which is what you see in a study, and effectiveness, which is what happens in the real world. And now we know this vaccine performs beautifully.
And is that what you, in a normal world, we would have had time to figure this out? Or tell us a little bit about, so that people who are listening are like, well, wait a minute, let me really understand what the difference is.
So this is always a difference between what scientists learn in a clinical trial, which is very controlled, right, and kind of ideal best case scenario, and then in the real world stuff happens. So it's not peculiar to vaccines or even vaccines rapidly developed. It could be true of new drugs that are being developed. You then start to introduce more room for human error, right? Mm-hmm. In a clinical trial, everything is done very carefully according to a protocol. When you move to a national rollout, even a very well-organized rollout, which is the case in Israel, you still have human beings many more human beings are involved. Obviously, human beings are involved in a clinical trial. But in a rollout, you've got large numbers of human beings who are involved, needing to do all kinds of things to make everything go right? And what happened in Israel, which is what is so stunning, is that it really, despite the fact that it's now in real world, actual public health settings all over this admittedly small country, but still, it is working as it's supposed to be working. And also, we have data from many more people. So even the world's largest clinical trial, 30,000, 40,000, whatever, not the size of the numbers of people we're looking at here. Many more people who are older than were in the clinical trials, many more. And of course, that's the group we're most concerned about, people with comorbidities in this population, and so on.
Hey, Ruth, President Biden is going to participate in an event just a little later that commemorates the 50 millionth COVID-19 vaccine shot. It sounds like a good number, but when we dig deep into that number, we see that the vaccine distribution has been very far from equitable in different cities around the country. What is the right way to make sure that distribution is fair?
So, super complex question, Kim. I mean, first of all, yes, it's a wonderful milestone to mark. 50 million doses is great. It is better than we where we have been, and it is nowhere near where we need to go. So this is, again, happy making, not quite as happy making as the news from Israel, but happy making. The equity question is much more complicated. What we seem to be observing all over the United States is that African Americans and Hispanics, less so Native Americans, are getting their immunizations at about half the rate of majority white people. And some of that is access, and some of that is understandable distrust of the vaccine itself. So people are not sure they want to take it yet. And basically, we need an all-hands-on-deck strategy, and many states and locations in the federal government as well have been working on it. But basically, we have to engage frontally with this justified distrust in some of our communities who have been treated so disrespectfully and with violations of human rights over the decades and millennia. We need to address that straight on, and it's happening. We need to reduce barriers to vaccine registration. So I'm sure you've experienced yourself or from family members how hard it is in many parts of the world to actually get a vaccine shot, how complicated it is to navigate some of these registration systems, and that systematically works against people who have less well education, who are not as literally wired and sort of social network-wise wired. So that's a barrier. Another barrier is where the distribution sites are. We need to have them in communities that serve systematically disadvantaged and disproportionately burdened communities. We need to prioritize vaccine allotment to those communities. There's lots that we can do.
This is a long list of things. Is this something?
I know. I've got a 6-point plan here.
Look, there's a reason that you are a professor of biomedical ethics at Hopkins. Is this something that cities can do on their own, or does the federal government need a hand in this?
Yes and yes, right? So cities, localities, and many are taking steps of this sort, can move on their own, small locations, big locations, but absolutely federal investment, federal leadership is key, and part of why we're in the spot that we're in and not further along is, of course, because we had neither of those things, federal leadership or federal investment in distribution and deployment in the past administration.
Have you seen signs, though, that it is improving, that the vaccines are getting out, the numbers are picking up? Because I think about, in particular, kids in schools. Kids have missed so much in the past year.
Yeah. So that's one of my biggest heartaches, I think, for all of us, the fact that we've seen so much setback in the well-being of children in the K through 12 age group in particular. It's just not as it should be. The main thing that each of us needs to do is do whatever we can to get community transmission rates down. So while vaccinations are important for teachers and for parents and eventually for children in terms of making people feel comfortable and confident about being in school or sending your kids to school, if we can't get community transmission rates low enough, we will never be in a situation where we will feel good about, where everyone will feel good, no matter what the science says, about getting kids back in school.
I don't like hearing that word never.
I take back never. When I said it out loud, I didn't like it when I heard it. We will get community transmission rates down. That will happen as vaccine goes up. But it will also happen and continue to happen if we keep up. This is all the good stuff that I'm sure your listeners are tired of hearing. But if people will mask up, if people will keep physically distanced, we can keep community transmission rates from escalating, and we can actually get them to go down. We know this. We've done it before. It works. So as we wait for the vaccine population uptake to rise, we continue to wear masks, and we continue to stay physically distanced, and we will get more kids in school, more hours a day, more days a week faster.
What should our expectations be about kids and vaccines?
Well, it depends on age of kids, right? So we have at least one vaccine that's authorized for use in children from 16 older. There are a number of studies that are looking at kids 12 to 18, 12 to 16. We may have pretty encouraging, we may have data, and it should be pretty encouraging coming in over, say, second quarter to third quarter of 21 of this year. There may be actually an evidence base for the FDA to approve vaccine in adolescents before the academic school year starts in the fall. I want our listeners to understand these are speculations. I mean, the fact that the trials are going on is not speculative, but when the data
Right.
will come in that will allow for a judgment like that is speculation.
All right.
Trials are just beginning with younger kids, and I won't hazard a guess there.
Yeah, fingers crossed. But the quicker, the better, I think many would argue.
Oh, yeah.
Ruth, thank you so much. Ruth Faden, founder of the Johns Hopkins Berman Institute of Bioethics, professor of biomedical ethics at the Johns Hopkins Bloomberg School of Public Health. And of course, that is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. All right, this week's cover story in the magazine, it's an incredible one. Shoes teenage resellers are wringing profits out of everything from the latest Yeezys to outlet store leftovers. Like, who knew, Tim, this is an asset class?
Teenagers knew.
They did indeed, right? This is why we should just go to our youngsters.
And the folks at StockX, we could say, too.
Exactly. All right, so let's get more from freelance writer Joshua Hunt, writing about it for Bloomberg Businessweek. He's on the phone in Alaska, joining us along with Bloomberg Businessweek editor Joel Weber from Brooklyn. Joel, in a year of already crazy trading trends and market stories, sneakers.
That's why I thought it was such a perfect time to do this one is, you know, in this age of Bitcoin and meme stocks and all these things that feel intangible, it's like, oh, by the way, there's a hard good that's actually an incredible market, and it's become amazingly lucrative for a certain, web-savvy, entrepreneurial, spirited kind of person. And what we've really seen just in the, it's not like sneaker reselling is new. This has been happening for years. But what we've seen just in the past couple of years, and then I think it's really come into its own during the pandemic, is how online everything really has become. And StockX a couple of years ago really created a new e-commerce platform. It also helped create even an index that could track some of the most lucrative of shoes and the ultra rare ones. The performance of that is something to behold. But I think what Josh really found was even post StockX things have changed, and the pandemic has really brought out a supply and demand element that's feeding the market. So Josh, why don't you tell us about how you found a character who's became basically the narrative for the story?
Yeah, I mean, speaking of turning to the young, in this case, finding the right character for the story was all about Instagram and social media, which is kind of where these teenage resellers live and die. I mean, it's like their branding and how they sort of show their clout and show their success and communicate with the people that are going to be not just their customers but their colleagues, their allies in arbitrage, as I say in the article. A lot of those initial meetings are happening through Instagram. So, I spent the first half of 2020 in Tokyo, Japan, and through the pandemic in a little different way than a lot of America was. And, when stores started opening back up there in the spring, I spent a lot of time walking through this neighborhood, Harajuku, which has for a long time had all these stores that specialize in selling rare sneakers, which is what sort of got me thinking about this in the first place. And inspired by that, by seeing this sort of real-life version of one of these online markets in Tokyo, where they've had them for, more than a decade and a half, I dove into Instagram, and sometimes you just have a feeling about a subject. And right away, I knew based on this kid's Instagram activity that I had something special in this kid, Joe.
And talking about somebody who's West Coast Streetwear is the name of the company he's got, and his Instagram presence. And what you're saying there, Josh, is it makes so much sense because you've got everyone. You can understand that there could be like a really ultra rare sneaker that is a grail, is the lingo, right? And you can get 5-figure prices on those kind of things. But what's so interesting about Joe's story and West Coast Streetwear in the pandemic is basically he realized that the other end of the spectrum, the bricks, which are basically just inventory sneakers, could also become incredibly lucrative online. So how did that part of the story unfold?
Yeah, well, that's the story as it's kept getting so much bigger than I initially thought it was just time and time again, the answer to my questions was just way different than what I thought it was going to be. I mean, I really came into the story thinking that, the conventional wisdom is that all the money comes from, a lot of really smart analysts that have told me, it's all about where the money is. And, and here I meet this kid, Joe Hebert, who has this West Coast streetwear brick building. And, actually a lot of my that's how I get my name out there, and I make a bit of money on those really rare hype shoes. But for me, it's really all about doing a volume business in these bricks. The shoes that often consistently sell, right around retail on StockX. They're not it's not the rare shoes or the ultra hype shoes, but they're the shoes that everyone buys. I mean, everyone. It's a high volume business, and by being really savvy about when to buy, when to sell, controlling inventory, and most interestingly, I thought doing a kind of volume trade on the side in discount codes. A lot of these stores and brands offer discount codes that might be tied to a customer's birthday or something like that. And, these could be up to 50% off codes. And guys like Joe, who are smart, they buy these things up and they apply them instead of, a $300 or $500 purchase like an ordinary consumer might. They apply them to like the maximum level purchase that they can buy them to, which is sometimes, tens of dollars, or even, some of these orders run into the hundreds of thousands of dollars. And there are all these interesting ways that these kids like Joe make these bricks, these less loved shoes, these kind of everyday, Nike and Adidas sneakers and New Balance sneakers. And, they make those very profitable.
Hey, Joshua, we're having a little bit of problem with your phone, so I want to go to Joel for this. Joel, how exactly did Joe do this?
Well, during the pandemic, I think the part of the story that Josh does a great job of explaining here is like just on a meta level, just to think about how no one went to brick and mortar retailers anymore, right? And we've seen strategically companies like Adidas and Nike shift to a more direct-to-consumer model. So that's playing into it. And so suddenly you had the Foot Lockers of the world doing like 50% off. And even they are kind of like a wholesaler. So you had all these other mom and pops out there. And so what the character at West Coast Streetwear that Josh found did was he basically bought a truck, and like a big one that he could throw a bunch of stuff in the back, and then proceeded to go on an epic COVID road trip. And it was all about how many pairs of shoes he could load up in the back. And he was basically amassing a massive supply of bricks. And by the time he got back home, he could sort of start opening up the floodgates or metering them out and basically playing with the supply and demand equation until he had flipped a tidy profit off of this road trip. It was just a totally fun, genius way to spend your pandemic.
Well, it's so funny because it's like using bots to figure out, which are the most sought after sneakers, and there's a little sophistication into it. And then ultimately it just comes down to, as you just said, Joel, a road trip.
Yeah, and of all the things that I could have been doing during the pandemic, like going on a great American road trip to like corner the sneaker market, I definitely feel like there's some FOMO there.
So I don't want to give the whole story away because it is so good. But can you give a little more color about where Joe comes from?
I actually would turn it over to Josh.
Okay.
Yeah, I think we have Josh. Yeah,
better.
Yeah.
So let's try Josh first, and if not, I can take it.
Come on in, Josh.
Can you guys hear me okay?
Yeah.
Yeah, it's better.
All right, yeah. So I guess the hint that I'll give your readers is the hint that I first give readers early on in the story, which is that when I asked Joe about why he's so good at what it is that he does and what sets him apart from, all the other kids out there doing the exact same thing that he's doing, the only hint that he would give me time and time again was that, it was an advantage to be living in Portland, Oregon, where Nike has its world headquarters and where Adidas has its U.S. headquarters. And, people who live in Portland or spend any significant amount of time in Portland, Oregon, know that it's a big sneaker town and know that it's pretty hard to live there without knowing some people that work at or Adidas. And without giving away the ending, that's the big hint that Joe gave me that eventually led to this revelation about a relationship that he had.
It sounds a little sordid. It's not everybody. It's a really cool twist. Hey, one thing we got to ask before we go: how much money is he making doing this?
Oh boy, I mean, it's. I'll tell you what, it's very weird to be interviewing 17 and 19-year-olds who could buy and sell you.
Imagine.
I mean, it's just unreal, the amounts of money. I mean, in terms of Joe was, didn't want to give away a lot in terms of profit, but I mean, his revenues are up in, $500,000 or some, and on top of that, he's reinvesting a lot of his profits. In fact, I just saw on his Instagram stories he just moved into yet another bigger warehouse. But aside from this, he's selling access. He's selling access to this Discord group to teach other young teens how to do what he's doing.
Yeah.
And he's earning $250 from each of his several hundred subscribers. So that's a big supplemental income right there.
We're all now Googling, how do I become a sneaker broker? Okay. Great story. Great cover story. And I'm so glad that we were able to get the line nice and clean or cleaner. Freelance writer Joshua Hunt. It is the cover story of Bloomberg Business Week, joining us on the phone from Alaska, along with Bloomberg Business Week editor Joel Weber. That issue online, hitting newsstands, and on the Bloomberg terminal with so many other great stories as well. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Biden administration is expected to soon release an unclassified report on the death of journalist Jamal Khashoggi. He was the Washington Post journalist who was murdered in 2018. His murder is believed to have been approved by Saudi Crown Prince Mohammed bin Salman. White House Press Secretary Jen Psaki says the president will be speaking soon with the Saudi king.
The president's conversation will cover a range of topics with the king. There's obviously a lot to discuss with Saudi Arabia and with the leaders of Saudi Arabia.
She did not mention what consequences the Saudis may face. The acting chief of the U.S. Capitol Police says the agency's incident command protocols were not adhered to on the day of the Capitol insurrection. Acting Chief Yogananda Pittman told lawmakers today the commanders in charge of supervising the officers were supposed to be giving directions as the violent mob stormed the Capitol, but she says there was a multi-tiered failure.
Our radio communications to officers were not as robust, and we are ensuring that our incident command system protocols are adhered to going forward and re-implementing training in those respective areas.
Lawmakers at today's hearing blasted failures of leadership and communication. New York State prosecutors reportedly have former President Trump's tax records. Multiple reports say Trump's accounting firm handed over several years of records to the Manhattan DA's office. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now, back to you, Carol and Tim.
All right, Nancy, appreciate that update. We've got an update on World and National. Now let's get an update on the trading day. Hey, Charlie Pelley.
Well, hello there. Lots going on. 10-year Treasury yields reached the highest in a year. GameStop extends its rally. Meme stocks back in focus. U.S. stocks selling off. Keep it locked into Bloomberg for the very latest. Right to the numbers. We'll give you the why in a moment here. S&P down 67 now, a drop of 1.7%. The Dow is tumbling 357, lower now by 1.1%. NASDAQ down 331, lower by 2.4%. Worst love of the day, NASDAQ have been down 488, down 3.6%. 10-year yield, 1.50% right now. Benchmark Treasury yield spiking to a one-year high. We've got the S&P, as I mentioned, lower by 1.7%. Gold is down 1.7% now, 17.73 the ounce. West Texas Intermediate crude up 0.4%, 63.43 for a barrel of oil. I mentioned some of those meme names. GameStop, for example, up 59% right now. Costcorp up by 44%. Lots of earnings after the bell among some of the names. Airbnb right now down 8%. DoorDash down 3.7%. Autodesk down 3.5%. Hewlett-Packard Inc. up by 6.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, Charlie just updated us on a few of the equities that are moving today, and of course, a broader look at the markets. Here to tell us more is Bloomberg News markets reporter Abigail Doolittle, joining us right here from the building in Manhattan, Bloomberg headquarters. Hey, Abigail, what are you keeping an eye on today? What's moving markets?
Wow, what an extraordinary day. One of those days where things that you've been watching for, waiting for weeks and months, and I'm talking about rising yields going out of control, seems to take everybody by surprise, because that's certainly the case on the day. And yesterday we had a prelude to it with the 10-year yield backing up a fair degree above 1.4%. But today, that sudden spike to 1.6%. At that point, Treasury notes, the actual bonds, had the worst sell-off since 2010. That was the degree of selling that happened there. It could have been some stops in place right around 1.5%, because if you recall last year, again, everybody prepared for this possibility. What would rising rates do to other risk assets? Well, we see these jitters, this volatility. Once above 1% seemed to only climb, and then some jitters at 1.3%, blew right through 1.4%. 1.5 seemed to be the number that really caused some real jitters. So that is still what I have my eye on here.
Yeah, and I do wonder, are folks, still historically low, but you know, we all, right? Super low, exactly. Watching all along the yield curve, is there any kind of nervousness among some of the traders and investors that you're talking to?
You know, that's a great question, Carol. I think that some folks certainly have to wonder whether or not if they've lost a little bit of confidence in terms of the Fed, because here you have the Fed all in, and I bring this up because the backup that we've seen in rates this year, the 10-year yield up more than 50 basis points, that's the most since 2013. That, of course, was a taper tantrum when the Fed was tapering its portfolio. At this moment, we have the Fed all in, Jay Powell saying they're not changing anything. They stand by ready to do whatever it takes. But with this backup in yield, it's almost the market saying, well, we don't know if we believe you. It's way too early to say whether or not investors will start thinking that, you know, the Fed's lost some control here. But certainly a question of confidence with the market seeming to go so quickly higher.
Are there any similarities, Abigail, to what we're seeing today that we saw on Tuesday when we saw the NASDAQ take a dive and then recover?
I would say today is a much worse version than the other day, and that's why. So 1.3% was tested successfully. It was digested to some degrees because we saw really big declines, big selling. At one point, Apple was down 6%, but at the end of the day, stocks were, you know, not down so much. Yesterday, we had a case where stocks were down sharply in the morning as rates were rising very sharply, but then at the end of the day, a big rally. Today, we sort of had the worst case scenario where stocks were digesting, it seemed, rates rising, but then as the 10-year yield simply kept going, you know, through 1.4%, 1.45%, above 1.5%. That just seemed to be the trigger that caused this massive selling. Not panicked, but certainly shocked.
I do feel like, though, Abigail, and I think I've talked with you about this before, and this whole idea of, you know, equities bounce back dramatically after the pandemic sell-off. And is this just a case of kind of the bond market finally saying, okay, folks, I'm now starting to see the recovery. I'm seeing earnings estimates. I'm hearing a lot of folks talk about a much better second half for 2021. And this is the bond market now, despite what the Fed says, and I think the Fed will still keep money really easy, that we're starting to see the bond market catch up with the equity market when it comes to a second half recovery.
Excellent point, Carol, and that is certainly the optimist case in terms of what we see happening here, and it really goes to the difference of what we were talking about the other day between reflation and inflation. So reflation is the idea that we have bond yields climbing as bonds sell off because the haven assets aren't needed. We have commodities climbing for the right reasons, stimulus looking toward that second half recovery. However, so many people are talking about when it happens, when you basically go too far too fast in terms of this backup in yields, that's when folks start to get a little bit nervous that maybe it's a little bit more than just the healthy reflation. Is the growth really there? That said, these sorts of things tend to happen in spurts, growing pains.
Right.
And so this kind of volatility may just be a piece of that for sure.
What are the individual equities that are telling the story this afternoon?
The one that stands out the most is really Apple. That's the one that has stood out for probably since last week, frankly. Once we learned that Berkshire trimmed the position, the stock is down almost 10%. From the peak in January, it's basically down 15%. So I would call that a stealth correction because it really hasn't been on the radar screen until all of a sudden it is now. Technically, that chart is broken. And it's
up 81% last year, though. I'm just going
to... That's exactly... So that's an excellent point. So connecting that back to the bond story. So now you have rates rising, and it creates a different cost structure, this repricing of risk. These stocks that have flown higher, and I love your point, Carol, because this is the biggest company in the world. It's not like we're talking about a penny stock. We have the biggest company in the world almost doubling last year, out of the March bottom through the December high, up 160%. So, of course, profit-taking makes some sense. Those people who bought less well, though, at that top, they're realizing that valuation is at a 5-year high, and the people who bought well back in March, they're taking some profit. So it's creating some jitters. You could say healthy consolidation, but painful as it's happening for some.
Tim and I were talking in the break before you came on, and we're like, listen, though, we've seen, like over the last 10 years, you've seen this, I've seen this, he's seen this whole idea of, you start to see a little bit of a pullback, and folks, whether it's algorithms kick in, I mean, we do see some kind of orderly trading in that all of a sudden someone says, you know what, there's an opportunity here for me, and the market seemed to bottom out. I don't know if that's what's going to happen. Who knows? But tell us about, because it does still feel a little bit orderly.
It does feel orderly, although I would say that there was a moment of panic, more so in the bond market than in the stock market midday when yields did move sharply higher. To your point, though, it does feel fairly orderly. And when you have selling like this, what you do want to see if it continues is a capitulation bottom, which is outright panic, and then complete frenzied buying. So we certainly have not seen that. And just taking a look at some of the technical charts, you have the NASDAQ 100, for instance, below its 50-day moving average on that weak Apple chart, which is, 11% of the NASDAQ 100, a huge component of the S&P 500. It seems as though the selling for stocks, whether it's orderly or if at some point it does become a little bit panicked, probably has a little bit more to go. And it has, I believe, again, a lot to do with your point, Carol, about Apple being up 81% last year. I mean, too far, too fast, even for the best company, the biggest company in the world.
Exactly.
Okay, so I'm looking over at the right side of the screen on the Bloomberg, and I'm still seeing that year to date, the Dow is up more than 3%, the S&P 500 is up more than 2.6%, NASDAQ higher by more than 2.8%. What does that mean in the context of today's sell-off? It's still, so far, not a bad year.
So, yes, and also given the fact that the year is so short. Well, to make it more interesting, if you do a sector analysis year to date, the best sector on the year, energy, up 30%. The second best sector, financials, up more than 10%. Most sectors are actually higher still on the year, so it is a good year. But if we adjust it just slightly, Tim, and we go to a one-month lens, the NASDAQ 100 is down, I believe, about 4%. The tech sector is down about 2%. So sometimes when you have shifts in trend, even if it's just the near term to medium term, it's subtle. So you want to look for that kind of a decline. And over the last month, I hate to bring it back to Apple, but again, it's the biggest weighting, down 14% over that time period. So when you connect today's selling to the year to date, it just seems as though perhaps you may see some of those year-to-date gains for the averages be erased for a little while, and then that healthy buying that could potentially come in when everybody determines that this tantrum, not a taper tantrum at all, maybe a tech tantrum,
That's right.
is over.
Well, Abigail, one thing too, I always feel like when we're in between earnings quarters, and I hate to be earnings to earnings to earnings because I like to think about the market in a longer perspective, but nonetheless, we are kind of in this weird junction between earnings reporting seasons, even though we'll still get a few numbers, some big reports I know coming out after the closing bell. And I do wonder if that's creating also a level of uncertainty here.
That's an interesting point, Carol, because it certainly creates a
interesting
pocket.
Smart or interesting stupid?
No, interesting smart for sure, because in terms of, it creates a lack of focus for the markets in a way. Yeah. So in terms of the micro and the actual fundamentals, so then investors have the ability to, obsessively watch bonds, as we were talking about the other day. We go through these time periods where it's rates versus the S&P 500, dollar versus the S&P 500, oil. So that's where we are right now. If we were in the heart of an earnings season, that might not be the case to such a strong degree for sure.
What should we be keeping an eye on to see if this is something bigger, something that moves past an aberration of today?
That's a great question. I think I would keep watching yields, and it's not so much the levels. That's what we've learned from today. It's not so much the levels, it's the speed. If you continue to see the 10-year yield back up 10 basis points every day, that is going to prove to be a worry for markets, because again, it steers the question away from healthy reflation and growth, which everybody seems to be on board to some sort of form of inflation that could really cause, a repricing of risk. So yields, VIX, and of course, as you know, I love the charts. I'm watching the technicals. So if the NASDAQ 100, if the S&P 500 goes below its 50-day moving average, and it's been flirting with it, probably more downside ahead.
Hey, listen, JP Morgan Chase, Chairman and CEO Jamie Dimon, he's sitting down for an exclusive on Monday, March 1st, with our own Ed Hammond. I mean, what is it that you would want to ask Jamie Dimon?
That's a really interesting question. I would want to ask him what keeps him up at night right now, frankly. And I know that it's impossible for us to speculate what that is. But given the extraordinary events over the last year, if we could fast forward to just a couple weeks from now, last year, who knew that we would be looking at this massive rally in stocks, essentially, the system in some ways stronger than it had been prior to the crisis. But there's got to be something that he's watching, because in the early month of the pandemic, he was talking about how difficult it was going to be. And I don't know that he was making Great Depression analogies, but he certainly wasn't talking about Apple up 81% in the year. So I'd be curious to see what's changed for him over that time period. But again, what keeps him up at night?
It's a guiding voice. We're going to hear from Warren Buffett, too, over the weekend, another guiding voice. All right, Abigail, great stuff. Thank you so much. Bloomberg News Markets reporter Abigail Doolittle joining us there.
In February is Black History Month, and throughout the month, Bloomberg Radio is celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history in 1870, Hiram Rhodes Revels is sworn in as the first African-American U.S. Senator. He represented Mississippi. His path to the U.S. Senate was not without controversy and contradictions. Conservative Southern Democrats challenged his credentials, citing the Dred Scott decision. They claimed Revels was not a U.S. citizen for the required period of time, 9 years, and therefore ineligible to hold office. Now, although the 14th Amendment granted citizenship to all African-Americans, it was only adopted 2 years prior. Revels came from a mixed-race heritage, and his supporters successfully argued that he'd been a citizen his entire life since he was not of pure African ancestry, so the Dred Scott decision did not apply to him. After serving in the Senate, Revels became the first president of what's now Alcorn State University. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. So, surprise, surprise, HP coming out with its earnings. HPQ, of course, the ticker there. We were expecting them after the close, but out now. The stock halted in trading, reporting its fiscal 2021 first quarter results, too. Talking about the fiscal year, adjusted EPS of $3.15 to $3.25, so some outlook. That is way above the estimate of $2.65. Talking about first quarter free cash flow of $900 million. The estimate was for $655.4, so that, again, is way above what the street was expecting. First quarter adjusted EPS, 92 cents a share versus 66 cents a share. That seems like a WOA number.
We're also seeing net revenues, $15.6 billion versus estimates of $14.97 billion. See second quarter adjusted EPS, 84 cents to 90 cents, like you said, versus 61 cents.
These seem off the chart, so we're going to look when that stock begins trading, most likely in the after hours, and we'll break it down. You're listening to Bloomberg Business Week. Actually, it'll start trading probably in a few minutes. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Thursday, February 25th. Do want to begin, though, with a developing story. Just getting the latest numbers out of HP Inc. HP Inc. looking at an early release of its numbers. We had been expecting the numbers after the closing bell. It does say it sees second quarter EPS in the range of 82 cents to 88 cents on shares of Hewlett-Packard. HPQ now halted ahead of the announcement. HP shares have been up by 3.9%. So stay with Bloomberg for the very latest on HP Inc. Again, sees fiscal year adjusted EPS in the range of $3 or $2.65. 10-year yield 1.51%. Tech shares leading a drop in stocks. The sell-off in global bonds deepens. Benchmark Treasury yield spiking to a one-year high. Equity markets lower across the board. Steep selling today with the S&P down 73, a drop right now of 1.9%. The Dow lower by 413, down 1.3%. NASDAQ is down 366 for the NASDAQ Composite Index, a drop there of just about 3.7%. As for the market outlook, Francis Donald is Global Chief Economist at Manulife Asset Management.
I tell my team, don't come in and tell me that the vaccines are doing better and virus case counts are down. We know that. I need the next big catalyst. And when I think about the next big catalyst, it's a little bit easier for me to find downsides than upsides based on what we already know.
Again, the 10-year yield, 1.51%. West Texas Intermediate crude up 0.3%, 63.38 a barrel. Gold down 1.8%, 17.72 the ounce. UPS and FedEx are ramping up vaccine distribution with plans for additional gains if Johnson & Johnson's inoculation is cleared by U.S. regulators. FedEx down 1.4%, UPS down 1.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So a top story this hour, and certainly one of the most read on the Bloomberg this weekend, we're going to hear from one voice that the investment world, and I might add the man on the street, have constantly monitored, listened to, and looked to, especially at moments of stress, crisis, and uncertainty. None
other than Warren Buffett. Kat Chiglinski joins us now. She's finance reporter for Bloomberg News and joins us on the phone from New York City. Kat, great to have you on the show. What has Warren Buffett been doing, or not doing, or I should say not saying, over the past few months?
Well, I think that's going to be the main reason investors really tune in on Saturday. I mean, his letters always draw a big crowd, but he was really quiet last year. You know, we heard from him during his annual meeting in May, where he sort of expressed some caution about the situation we were in, and then we didn't hear from him for months. And, you know, we've gotten updates on how Berkshire's doing, but I think in a year that really demanded corporate leaders to kind of speak up about big topics, whether it was the presidential election and all that was going on with that, or racial protests, we didn't really hear much from Buffett. And I think that's why investors on Saturday are hoping to sort of hear him give his take about a year that was so crucial to the U.S.
Well, Kat, you know, listen, this is, you know, an individual who, during the financial crisis, I remember him, was it 60 Minutes? Like, this is somebody that in times of crisis and uncertainty that we kind of look to. Why has he been so quiet? And I listen with a lot of respect because he's 90 years old.
Agreed. And, you know, I mean, he is careful. He's always been strategic and careful about, you know, sharing his thoughts. He has been quiet on, like, issues such as politics in recent years. And I think that's been kind of an interesting change. I mean, he campaigned for Hillary Clinton. He's done stuff in the past with politics. But we didn't really hear much out of him in this recent election. We just know that he talked on the phone once with Joe Biden. And I think there is a little more caution, and I think Kathy Seifert and the analysts at CFRA Research really put it well. Like, I mean, obviously the discourse has changed a lot. You know, if you do talk politics at a company, you might be attacked by one side or the other. So if you're trying to walk a middle ground, which I think Buffett does try to carefully do a lot, it's harder to find that middle ground these days.
So do we expect to hear anything more about his positions, or was that news out in just the last few weeks when we did hear about Berkshire Hathaway trimming its position in Apple, for example?
So, yeah, we did have some of that news of, like, the trimming in Apple. You know, he revealed the big new Chevron and Verizon stakes. I do think we are going to hear a little bit, at least, of his overall stock market strategy. And I think this is sort of key because everyone who follows Berkshire wants to know more about their cash deployment. You know, they want to know where Buffett's actually putting his money to work. And while he was sort of active in the stock market, we actually saw him sell a lot of stocks last year. Like, he got out of the airlines. He trimmed a lot of his bank holdings, which used to be a huge portion of that portfolio. And while he did buy new stakes, like the Chevron and the Verizon ones in particular, I think there was some sort of reshaping of the portfolio that, if he does touch on, I think investors are going to be really interested to hear more.
Is it right? $427 billion in cash? I'm looking at FA on the Bloomberg. Is it more than that?
Oh, yeah, no worries. It's $145 billion, around that,
okay.
Which is way less. But still a lot of money to handle. And honestly, he's been hitting records almost every quarter in terms of the cash pile. So again, that becomes a huge question for investors.
Yeah, absolutely. I mean, I feel like there's so many topics that they want to know about from him specifically. Will he be pushed again potentially, or will he even address succession?
You know, he's been really careful. And I think part of that is, you know, in 2018, he named Greg Abel and Ajit Jain to vice chairman roles. And that really signaled to investors that they're the two who are most likely to take over. You know, unless it's a crazy Saturday for me, you know, and he does actually step down or something, I think we might just get a little more of an update on how he's doing. And I think that's important to investors because we sort of understand that Berkshire has a plan in place for succession, even if we might not know exactly what it is. But I think investors want to know that as he turns 90, how is he actually doing? How is he feeling? How is he mentally doing? I will say that we saw Charlie Munger yesterday speak. And at 97, he's still sharp as a tack.
Yeah,
and spirited.
Yeah, he wasn't so positive on Robinhood and Bitcoin. In fact, Robinhood responding today to those comments. Hey, Kat, can you talk a little bit about how Buffett played, not played, but even campaigned in the 2016 election or talked about politics and how it's been a departure in recent years for him to kind of stay silent?
Yeah, so Buffett has always taken a careful tack, right? He says that he doesn't want Berkshire to, you know, sort of take any views, but he was willing to do his own, you know, personal campaigning for these politicians. And, you know, I mean, he wasn't ever, you know, a huge, like a crazy donor, but he definitely would put his backing to these politicians. And so for him not to, over the past 4 years, he's been very careful about what he said about our former President Trump. And in this recent election cycle, you know, his annual letter before the last election didn't mention politics at all. And it's just a little more quiet, you know, and it's hard to say that. I mean, maybe that's good. You know, maybe the problem is we have so many people expressing so many opinions, but it's just it's such a reserved part of Buffett that you sort of wonder, why is he stepping back?
Hey, Kat, just got about 45, 50 seconds here. Just how you end your story about, go back to the dot-com bubble. And Warren Buffett actually talked about the time as if it was some kind of virus, right?
Agreed. Yeah, he mentioned it was as if a virus sort of gripped investors and they had these hallucinations where, you know, the companies were really not priced correctly. And I think that's honestly pretty key to today and what we're seeing with GameStop. So we're hoping, you know, depending on when Buffett put pen to paper on this letter, we're hoping that maybe we'll get a little bit of his thoughts on kind of the stock market speculation and where he expects it to go.
What time does that letter hit?
It should hit 8 a.m. Eastern time on Saturday.
All right, you're going to be up early.
Yeah, we know what you're doing this weekend.
Get your coffee and croissant. Good reading. And then you can listen to our Bloomberg Business Week weekend podcast. I'm just going to tell you, it all comes together.
Perfect. Plans for the Saturday already taking fold.
Exactly. Kat Jaglinski, thank you. Finance reporter, Bloomberg News. She is our go-to on all things Berkshire and Warren Buffett. Just a great reporter on the phone in New York City. All right, back to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Former President Donald Trump's tax records are now in the hands of New York City prosecutors. Bloomberg's Nathan Hager reports from Washington.
A spokesman for Manhattan District Attorney Cyrus Vance's office says prosecutors enforced a subpoena on former President Trump's accounting firm within hours of the Supreme Court rejecting his last-ditch effort to block it. The documents are protected by grand jury secrecy rules and are not expected to be made public, but Vance has been pursuing 8 years of the former president's records for the last year and a half. Prosecutors have indicated they're looking into possible tax and insurance fraud charges as well as falsification of business records. In Washington, I'm Nathan Hager, Bloomberg Radio.
Lawmakers have been posing more questions today to top U.S. Capitol security officials concerning the January 6th attack on the Capitol. Congressman Tim Ryan expresses his frustrations.
How could the security planning, policies, and procedures apparently be so lacking and ill-prepared?
Acting Police Chief Yogananda Pittman admits there were a lot of missteps.
The Capitol lockdown was not properly executed. Some of the officers were unsure of when to use lethal force.
She says the department is now holding daily calls with its intelligence partners to prevent any future attacks. Former Michigan Governor Jennifer Granholm has won Senate confirmation to be President Biden's energy secretary. Granholm served 2 terms as governor in a state that's dominated by the auto industry. In the cabinet, she'll be a key player in Biden's vision for a green economy. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic in our Interactive Brokers studio in New York City. And earlier today, our Bloomberg Live team hosted the Bloomberg Crypto Summit. A great lineup. Listen, very, very topical as we watch Bitcoin and other digital currencies. And one of the speakers or on a panel, I should say, was ARK Invest Cathie Wood, of course, CEO, CIO, and founder of ARK, and someone who we caught up earlier in the week and talked about a lot of things, including Bitcoin. So check out what she had to say, though, at the Crypto Summit today about the market cap potential for Bitcoin. Check it out.
When you aggregate all of these use cases for Bitcoin and assume a conservative allocation, let's say in the terms of cash or insurance policies, you do get into the trillions of dollars of market cap potential out there.
That, of course, was Cathie Wood, CIO, CEO, founder of ARK Investment, earlier at our Bloomberg Crypto Summit. Listen, she told us, too, she's still bullish on Bitcoin, reminded us that things don't go in a straight line up, and at the summit today saying that, Bitcoin is in its early days.
Interestingly enough, we're seeing Bitcoin now only higher by about 0.4%. She does have Bitcoin stakes through Grayscale, ETF allocations, but she also said, think about it in the context of Apple. She said, quote, it's less than half of Apple's valuation, and here we're talking about the reserve currency of the crypto asset world. Basically saying it's tiny if you think about it in a market cap perspective. I mean, look at the size of Apple.
Yeah, exactly. Some perspective there. And what's interesting, too, she went on to say, we expected institutional investors to start moving in. We're talking about Cathie Wood. She said, what we did not expect from institutions was the diversification on their balance sheet and a diversification of their cash assets into Bitcoin. That's a twist.
Yeah, it is. And what we saw from Tesla CEO Elon Musk earlier this month with the $1.5 billion of cash on its balance sheet, then this week with Square, $170 million in the most recent quarter. Not too surprising given who those companies are led by, but still movement.
Yeah, absolutely. And listen, certainly on our radar. So check out that for more at Bloomberg.com. This is Bloomberg. right off the bat to administer 100 million doses of COVID-19 vaccines in their first 100 days in office. We've seen numerous updates, press conferences, obviously the Biden team there, talking with various vaccine makers, talking about ramping up production, getting those vaccines out to Americans a lot sooner than everyone was expecting, creating massive vaccination centers around the country. That has certainly been his priority.
It has, and it comes after we learned that we did get some good news yesterday about the Johnson & Johnson vaccine and that single-shot vaccine, how it could accelerate the rollout of vaccine in this country. But as we've talked about many times before, availability of the vaccine is only one step in the process of administering the vaccine. For some Americans, it's still likely to be several months away before they do have access to vaccine. And, you and I talk to different doctors each day on the program. Many of them do have different timelines that they've set out, different estimations for when life will look somewhat like it did before the pandemic. I'm not going to say it's going to return to normal, but in general, they're starting to get more optimistic.
Yeah, absolutely. I do feel like there's some visibility, some outlook, that we're hearing a lot more about from certainly people in the medical community, but even from CEOs and so on. And what's interesting is I mentioned about, that goal of administering 100 million doses within their first 100 days in office. The administration seems to be well on their way, obviously, to achieving that goal. I think they reached the halfway point just about 36 days in office. To be fair, though, the U.S. was already distributing, I think, let me just look at the numbers here. I think about 900,000 doses of vaccine a day by the time he took office on January 20th. So the numbers were pretty fairly up there. But we know in terms of our conversations that in terms of getting ahead of the variants, it's really key in terms of getting as many people vaccinated as quickly as possible.
And you know what? We were still seeing until really yesterday a lot of the effects of the weather last week in Texas and throughout much of the country that disrupted the transportation shipment of vaccine. We saw the number drop significantly last week and even over the weekend and in the early part of this week because of that. It wasn't just in states like Texas, but that disrupted the shipping network throughout the country. So there were a lot of areas that didn't have access to vaccine.
Right. The transportation system just really kind of shut down and the network really disrupted. Keep in mind that we have Johnson & Johnson's COVID-19 vaccine. We are on or just awaiting the FDA on the verge of granting emergency use authorization for that. All right, let's take you to the White House and President Joe Biden.
Thanks for your leadership. Thanks for being here. 2 weeks ago, I spent some time with you and Dr. Francis Collins, the director of the National Institute of Health at NIH. He gave me a tour of the Vaccine Research Center in Bethesda, Maryland. And it's the place where our top scientists spend years researching and developing vaccines and treatments for all kinds of viruses. The brilliant team there made possible the rapid deployment and development of COVID-19 vaccines, and they're truly remarkable. And this administration will follow the science to deliver more breakthroughs. We are doing that to beat COVID-19 and other diseases like cancer, which is something that's so personal to so many families, including me and Kamala's and many of yours. We've asked Dr. Eric Lander, a renowned Harvard MIT scientist, to serve as my science advisor and head of the Office of Science and Technology Policy and co-lead the Presidential Council on Advisory Science and Technology. These are the White House offices that bring together the country's top scientists to address our most pressing needs. And they'll be part of the work to develop a DARPA-like advanced research effort on cancer and other diseases, just like we do DARPA in the Defense Department, which develops breakthrough projects to secure our national security. And relatedly, I'm delighted to see 5 of the nation's leading cancer centers are joining forces today to build on the work of the Cancer Moonshot I was able to do during the Obama-Biden administration to help break through silos and barriers in cancer research. We're making progress. There's so much we can do, so much progress within our reach. And that's why I'm thankful to the folks here today for getting their vaccine shots. Gerald Bunn, and Corey Hamilton, both DC firefighters. I said to Corey that, that old expression, God made man, then he made a few firefighters. Thank God we have them. And Linda Bussey is a manager of Safeway grocery store in Bethesda. Victoria Legerwood Rivera, who is a local school counselor. And Elizabeth Calloway, who's a registered nurse who administers these shots. And the more people get vaccinated, the faster we're going to beat this pandemic. That's why one of my first goals in office, when I was just before I was sworn in, I indicated that my goal was to get 100 million COVID vaccine shots in people's arms in my first 100 days as president. At first, critics said that goal was too ambitious. No one could do that. Then they said it was too small. That the bottom line, though, is that America will be the first country, perhaps the only one, to get that done. And today, I'm here to report we're halfway there. 50 million shots in just 37 days since I've become president. That's weeks ahead of schedule, even with the setbacks we faced during the recent winter storms, which devastated millions of Midwestern cities, towns, and also the same in the South. We're moving in the right direction, though, despite the mess we inherited from the previous administration, which left us with no real plan to vaccinate all Americans. And every time we administer another 50 million shots, I'm going to use that milestone to report to the American people on our vaccination program and on our overall fight against this pandemic. The good and the bad, I'll tell you, the success and the failures. And here's the deal. Here's the deal. The story of this vaccination campaign is like the story of everything hard and new America does. Some confusion and setbacks at the start, and then if we do the right things, we have the right plan to get things moving. That's what we're seeing right now. The weeks before I became president, the previous administration saw 6 million shots administered last week. This coming week, we will administer over 12 million shots, double the pace in just 6 weeks that we've been in office. Other milestones. We've increased vaccination distribution to states by 70%. Nearly 60% of people over the age of 75 have now received at least one shot. It was 14% 6 weeks ago. And close to 50% of people over the age of 65 have at least one shot now. It was 8% 6 weeks ago. It's important because people over 65 account for 80% of all the COVID deaths. Additionally, about 75% of the people who live in long-term facilities have gotten their first shot, and those cases are at the lowest level since reporting began in May. Here's how we've been doing it. It starts with increasing the supply. My team has worked very hard with vaccine manufacturers, Pfizer and Moderna, to ensure we have enough supply for all adult Americans by the end of July. When we discovered the vaccine manufacturers weren't being prioritized when it came to securing supplies they needed to make the vaccine, we fixed the problem. I used the Defense Production Act to speed up the supply chain for key equipment, which has already helped increase vaccine production. Last week, I toured the Pfizer facility, manufacturing facility, in a plant in Kalamazoo, Michigan. It's incredible, the precision, the safety, the pride, and the sense of purpose everyone involved in that process and project has. We've all seen the news about Johnson & Johnson's vaccine. The idea of a third safe and effective vaccine is very promising. The Food and Drug Administration, the FDA, is reviewing the data and will review recommendations from outside committee of experts that will be meeting tomorrow. Now, let me be clear. We are going to do this the right way. The FDA will decide on emergency use authorization of a vaccine based on science, not due to any political pressure from me or anyone else. No outside factors. What I will say to the American people is this. If the FDA approves the use of this new vaccine, we have a plan to roll it out as quickly as Johnson & Johnson can make it. We'll use every conceivable way to expand manufacturing of the vaccine, and we'll make even more rapid progress on overall vaccines in March. I'll have more to say about this in the days after the FDA review. Look, we've been laser focused on the greatest operational challenge this country has ever undertaken, administering shots in the arms of hundreds of millions of Americans. We're increasing the number of vaccinators. One we found was you may have the vaccine, but not enough people to put the vaccine in someone's arm, like you just saw. We brought back retired doctors and nurses. We've already deployed more than 1,500 medical personnel you see during national disasters from the Federal Emergency Management Agency, FEMA. And we commissioned our commission corps from the Department of Health and Human Services and the Defense Department, including the National Guard, supplying vaccinators. We're lining up thousands more to do the vaccinations. We're also setting up more places for people to get vaccinated. As of today, we provided $3.8 billion to states, territories, and tribes to create hundreds of new vaccination centers and ramp up the existing ones that are there already. We're working with governors across the country in red and blue states to bolster their efforts to stand up hundreds of vaccination centers from stadiums to community centers, houses of worship, large parking lots. We're providing personnel and equipment and covering the costs for the states, including for the use of their National Guard, which they're incredible. Today, Jill and I, or I should say tomorrow, Jill and I will travel to Houston, Texas, to tour one of the first federal mass vaccination centers and to thank everyone involved. This is an example of the kind of partnership between federal, state, and local governments and public and private partners that's going to get this job done. We also sent millions of vaccines to thousands of local pharmacies all across America to make it easier for folks to get the vaccine shot like they would their flu shot, going to a familiar place, familiar folks that they can trust and know to get the shot. And for folks who don't live near a vaccination center or a pharmacy, we're deploying mobile units. These are special vehicles and pop-up clinics that meet folks where they live and where they don't have transportation to get the shots, to get to the places to get the shots. We've also started to send vaccines directly to community health centers to help the hard-to-reach folks in cities and small towns and rural communities, in Black, Latino, Native American communities that have higher rates of COVID infections and deaths than any other groups. As a result of these round-the-clock efforts, in 5 weeks, America's administered the most shots of any country in the world, with among the highest percentage of population fully vaccinated. That's progress we promised. It's also true that while COVID-19 vaccinations are up, COVID cases and hospitalizations are coming down. But I need to be honest with you. Cases and hospitalizations could go back up with new variants as they emerge. So I want to make something really very clear. This is not a time to relax. We must keep washing our hands, stay socially distanced, and for God's sake, wear a mask. Some of our progress in this fight is because so many Americans are stepping up and doing those things. And the worst thing we could do now is let our guard down. Of course, it's my hope to come back in the next report that after we've done another 50 million shots before the end of my first 100 days. But here's the critical point. As hard as it is now to believe, we're going to hit a phase in this effort, maybe as late as April or May, where many predict that instead of long lines of people waiting to get a shot, we'll face a very different scenario. We'll have the vaccine waiting. We'll have ramped up vaccine supplies. We'll have folks to administer the shots to the most of the people who aren't eager to get the shots. At least that's been the prediction. I don't think it's going to happen. I think more people see other people getting the shots. It's going to build confidence. But at the same time, there are people who live in hard-to-reach areas who can't get them, and there are folks who are hesitant to take the shot in the first place. We all know there's a history in this country of subjecting certain communities to terrible medical and scientific abuse. But if there is one message that needs to cut through, it's this. The vaccines are safe and effective. And I believe as you see your neighbor, your husband, your wife, your son, your daughter getting it, that you will be much more inclined to get it. Listen to Dr. Fauci. Listen to the scientists who developed these vaccines and the extensive and rigorous review they went through. I did. I took my shots publicly to demonstrate to the American people that it's safe and effective. But the time is coming, maybe 60 to 90 days, when the supply is adequate, but not enough people can access the shots or don't want them. To address that challenge, we're going to launch a massive campaign to educate people about vaccines, that they are safe and effective, and where to go to get those shots in the first place. And we're going to bring together leaders of all segments of our society to educate and encourage all Americans to get vaccinated. So I hope the Senate will soon confirm a key leader to that effort, my nominee for the Secretary of Health and Human Service, Javier Becerra, who did so well in this hearing this week. And I hope Congress passes the American Rescue Plan, which I've been pushing, which provides funds for everything we need to do to beat this pandemic and to get the economy going again. Now, critics say the plan is too big, that it costs too much. But let me ask a rhetorical question. What would you have me cut? What would you have me cut out? On vaccines alone, if we don't invest $20 billion to vaccinate the nation, doesn't that make sense? Or $160 billion in total toward the pandemic for testing, to protective gear, to vaccine production and distribution? I'm ready to hear any ideas on what will make the American Rescue Plan better, stronger, and effective. But we'll have to answer who will get helped and who will get hurt. I want to close with this. The question I'm asked most often is, when will things get back to normal? My answer is always honest and straightforward. I can't give you a date. I can only promise that we'll work as hard as we can to make that day come as soon as possible. While things are improving and we're going from a mess we inherited to moving in the right direction at a significant speed, this is not a victory lap. Everything is not fixed. We have a long way to go. And that day when everything gets back to normal depends on all of us. It depends on Congress passing the American Recovery Act, recovery plan. And also for us to remain vigilant, to look out for one another. I've said it before, wash your hands, stay socially distanced, wear a mask, get the vaccine when it's your turn. When your friend or neighbor or loved one is eligible, encourage them to get vaccinated. And above all, remember, we can do this. This is the United States of America. There's nothing we can't do when we do it together. So it's not over yet, but we're getting close. And God willing, if we do all we know we have to do, we're going to beat it sooner than later. May God bless you all, and may God protect our troops. Thank you for your time.
Mr. President, whatever happened...
All right, President Biden speaking at an event commemorating the 50 millionth COVID-19 vaccine shot in the United States, live there from the White House, talking about the weekly pace of shots doubling since President Trump was in the White House, and talking specifically about the J&J vaccine that is expected, or the FDA on the verge of granting emergency use authorization. That is something we've been looking forward to. Could get that news potentially tomorrow. And also talking about the J&J shot will be shipped as fast as it can be made.
The president also saying that nearly 60% of people 75 and older have gotten a shot, and almost 50% of people who are 65 and older have gotten one shot, saying that there will be no political interference on the J&J shot. And as you mentioned, Carol, it'll be shipped as fast as J&J can make it.
I will say at the end, a little bit of a warning, saying COVID cases, hospitalizations could go up, even though the numbers have been going down, reminding us, wash hands, wear masks. I feel like there was some very strong words of caution and nervousness that if we don't get this right and if we don't continue to be vigilant when it comes to the virus and the vaccine, we could be, or to the virus, that it could, the numbers could go back in the wrong direction.
I think he said, for God's sake, wear a mask. I mean, and he's been clear about that for months at this point. The administration and President Biden also saying that they're launching a massive campaign to show that vaccines are safe and effective. So I expect to hear more on that front soon.
Yeah, that was an important point. All right, let's get a quick check on the markets because stocks now at their lows, Charlie Pellet.
Indeed, the losses intensifying. 23 minutes to go ahead of the closing bell. Right to the numbers. 10-year, watching that closely. 1.55% right now. The Dow, the S&P, NASDAQ, all at session lows. S&P is now down by 109 points, a drop of 2.8%. The Dow is down 661 points, a decline right now of 2.1%. NASDAQ is down 522 points for the NASDAQ Composite Index, down 3.85%. The NASDAQ 100 Index down 3.9%. Russell 2000 down 3.8%. Dow Transport's lower now by 2.2%. Again, worth repeating on the 10-year, 1.54%. Technology shares leading a rout in stocks while the sell-off in global bonds deepens. Benchmark Treasury yields spiking to a one-year high. Pfizer and partner BioNTech have begun a clinical study to see if a third shot of their existing COVID-19 vaccine can stimulate stronger immune responses against new variants. In addition, the companies plan to begin a human study of a new vaccine that is specific to the newly circulating variant that emerged in South Africa. Gigi Granval is a senior scholar at the Johns Hopkins Center for Health Security.
If anything this year has taught us is that infectious diseases don't care about borders, and until the world has this better under control, we're going to continue to see variants and surprises, and so that's why we need to do more to get the world vaccinated.
The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder and majority owner of Bloomberg LP, parent company of Bloomberg News. Among some of the vaccine names that we track, Pfizer shares down 5.2%. Down 0.5%. BioNTech is down 2.4%. AstraZeneca down 0.8%. Moderna shares, they're higher now by 1.1%. Johnson & Johnson down 0.2%. And again, to repeat, Pfizer shares, they are down by 0.5%. Toronto Dominion Bank says it will close 82 bank branches in the U.S. as part of a, quote, store optimization in its American unit. Recapping, 10-year yield, 1.55%, S&P now down by 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Nice. All right, so a little Dylan there.
Bruce, right? This is Bruce.
Right. Oh, yeah. That's Bruce?
Yeah.
Sorry.
Yeah. Oh, well, I didn't cheat.
I'm impressed.
Hey, are you, is this a are you happy about the news yesterday, Dave Wilson?
Well, I mean, I'm glad the case was settled.
Yeah, maybe happy is not the right word.
Serious
Sorry.
Charges didn't stick.
Yeah.
Let's put it that way.
Yeah.
You know, the whole issue with, a couple of tequila shots in a federal park, and that didn't go over so well.
No.
But, no reckless driving, no DUI,
Yeah. And so cleared up. So that's a good thing.
So Bruce Springsteen can move on. The Jeep ad that he appeared in during the Super Bowl can get posted again. And we can talk about a long time coming. And it has nothing to do with any of that. It has to do with bank stocks. I mean, it's been a long time coming for them to get out from under the shadow of the 2008 financial crisis. And, the best way to kind of, get a sense of that is to look at the KBW Bank Index, which tracks 24 of the largest U.S. lenders. It's a pretty popular benchmark. And, just yesterday, it got to within about 1% of its high from, get this, February 2007. So you're talking about 14 years where bank stocks have been down. They've been unable to recover all that they lost in the financial crisis and its aftermath. So, it tells you that something's finally turning around. But at the same time, just to put a point of comparison on it, I threw in with the chart the S&P 500. And over that same 14-year period when bank stocks have been what investors might call dead money, the S&P 500 was up 169%. It just goes to show you how badly the banks have done in relative terms. At the same time, it shows you that in absolute terms, they're finally getting back to where they were 14 years ago. If you want to know more, folks, send me an email. I'll get you the chart. The explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Interesting. Yeah. Like, it's amazing how long it's taken, right?
And you know what else is amazing?
What?
The KBW Bank Index may be headed for its best month ever.
Wow.
In February.
Because the
And
higher
the index
rates
goes back
or
to
what?
1992.
Yeah.
So it just
It's a
goes
long
to show
time.
you. I mean, even though it's, last I looked, it was off a bit today. I mean, still, you're talking about up more than 20% for the month.
Yeah, that's pretty significant. Yeah.
Yeah.
Yeah, absolutely. And just kind of interesting to see. So, finally, maybe some rotation here, right, in the market?
It's part of that bigger idea that, finally investors are more inclined to buy value stocks, the ones that are relatively cheap. That, the banks, if you count them in with the kinds of companies that do well when the economy's picking up, cyclical stocks, as I was talking about yesterday, they certainly fit there too.
Right.
So, there are a number of reasons why they may be doing especially well at this point.
Good point. All right, Dave, thank you so much. Dave will be back a little bit later on with his stock of the day. You are listening to Bloomberg Business Week. Carol Masser along with Tim Stanovic. And, of course, watching the markets. And we do want to get to the world of national news. Over to Nancy Lyons.
Hey, Carol. As you heard here on Bloomberg, President Biden is marking a milestone in his goal to have 100 million people vaccinated in the first 100 days of taking office. He says we're already halfway there.
15 million shots in just 37 days since I've become president. That's weeks ahead of schedule, even with the setbacks we faced during the recent winter storms, which devastated millions of Midwestern cities, towns, and also the same in the South.
Biden says, though, it's too soon to relax, especially with new virus variants showing up all across the country. A House subcommittee today took its turn probing the invasion of the U.S. Capitol, hearing testimony from the acting chief of the Capitol Police, Yogananda Pittman.
A disquieting element of the investigation has been the arrest of a number of off-duty police officers who joined the mob attacking the Capitol's police. Representative Rosa DeLauro asked Pittman about the sympathies of some of her cops.
The footage of Capitol Police posing for photos with insurrectionists. How many officers are under investigation?
So right now we have 35 officers that are under investigation, and we do have 6 police officers that have been suspended with their police powers being revoked.
Pittman said the mob was so large and forceful it would have taken a regiment of soldiers to stop them. In Washington, Irv Chapman, Bloomberg Radio.
Former President Trump's tax records are now in the hands of the New York District Attorney. Prosecutors apparently received the millions of documents just hours after the U.S. Supreme Court denied President Trump's last-ditch effort to keep them private. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy, appreciate that. Nancy Lyons with a World of National News update. You are listening to Bloomberg Business Week, and this is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it's time for the drive to the close. We're just rounding off our worst levels of the session, but down still 2.2% on the S&P, down 1.6% on the Dow, NASDAQ off 3.3%. Watching the overall equity trade, we've also been watching those meme stops, and GameStop in particular. We saw it double yesterday, take off again today. So let's get into it with Bloomberg News cross-asset reporter Katie Greifeld on the phone in New York City. Also with us and writing about it, Jonas Sarah, Bloomberg opinion columnist, writer and host of the wildly popular Wondery podcast, The Shrink Next Door. If you haven't listened to it, Tim, you need to listen to it. Being made into a series on Apple TV Plus.
Carol, blown on my spot here.
How could you not? It's so great. Guys, thank to have you with us. Joe's with us from Telluride, Colorado. Katie, let me start with you. Talk to us about GameStop and the meme stocks. What are we seeing? And is it just like what we saw a few weeks ago?
Well, it's back, apparently, GameStop, back from the dead. But I'm going to argue that it feels different than it did in January, because what's different now is that you have the short interest on this stock is way lower. Last estimates have it around 30%, whereas in January it was 141%. So a wildly different sort of feel there. It's probably not being driven by short covering to the same extent. And I'll also say what's interesting, just watching the market action today, I mean, GameStop was up over 100% at one point. Now it's up a very tepid 30%. So it's paired that gain.
It's all relative.
Basically, it's all relative, but basically as the rest of the market sells off, it feels like some of that is cooling just this crazy frenzy in GameStop, whereas in January it was the other way around. It was really GameStop in charge and driving the rest of the market.
Hey, Joe, come on in here because your column that's out today is all about this. .com survivors have wisdom for the GameStop crowd. You caught up with investors from 22 years ago to learn how navigating a stock bubble affected them for the rest of their lives. You covered this in the late 1990s and the early 2000s. Does this feel similar? Does it feel different right now?
Well, there were a few different aspects. One is the anger that certainly wasn't around. The idea that we have to, we're buying this, we're running up these stocks to get the man. That certainly was not part of the .com bubble. But the idea that you're buying stocks without even thinking about revenue, profit, book value, PE, that's very similar. And, I think what the .com people who experienced the .com bubble, who are not professional investors but dove into it, is when you dive into stocks because they're going up and they're going up fast, it doesn't end well. And for most of the people that I interviewed, it didn't end well. And I think when you ask them about the meme stocks, they say, here we go again. That's their attitude.
Well, and I do wonder, Katie, you talked about the trade being a little bit different, and I do wonder, we've had hearings in Washington, a lot has happened since. What kind of chatter are you seeing in some of the Reddit rooms? Like I'm just curious if it's been impacted at all.
Well, I mean, if you look at Wall Street bets right now, and I don't recommend spending a lot of time there, but they are definitely just triumphant today. They're seeing this as a win. They got the stock back up. And it's interesting that this reached Washington, obviously. There's a lot of chatter about, whether we're going to get more transparency around short selling, whether short selling is good or bad. That debate has reemerged from all of this. And where you actually could see change is whether or not, the time it takes to settle a trade will change. There's been some talk of it being shortened from 2 days to 1 day, and we'll see if we'll get there. But I mean, to the point of comparing this moment in time to the late 90s, I think what's different now is just how much activity we're seeing in the options market, because these crazy moves that we're seeing in the equity markets, it's even crazier in the options market, just the level of activity we're seeing there. So that's a slightly different nuance than, what we were seeing in the late 90s.
Well, Joe, come in on that. And I have to say, I remember the late 90s. You're right. You got into a cab. People talked about tech stocks. I remember, just before the financial crisis, real estate, I'd go on a yoga retreat and everybody was talking about buying and selling homes. Like, it was just crazy. Talk to us a little bit more about, the differences here.
Well, this is one thing that's been on my mind a lot. After the .com bubble burst, people just lost money. There was no Washington investigation. There was no, there was no aftermath of how do we protect investors better and blah, blah, blah. People just lost money. That's how you learned. You lost money.
Right.
And honestly, I think I'm kind of floored that there have been congressional hearings. To do what exactly? To protect who? From what? And the idea that short sellers play a really important role in the marketplace.
there are excesses on the short side, just as there are excesses on the long side. But the idea that these guys are going to drive short sellers out of business is A, implausible, and B, it would be a really bad thing if that happened and you only had longs.
Well, did we need to do anything, though, Joe, in your view, in terms of checking out the system in the aftermath? Especially when there were traders who were on these platforms and all of a sudden they couldn't trade anymore or their positions were closed out.
Right, but that has happened historically.
Yeah.
You know, for the same reason, for the exact same reason. They have to put up more collateral, and therefore, the brokerage house is in trouble. I mean, the big problem is that Robinhood never really explained to their investors, kind of what the deal was. They're just like, oh, free trades. So maybe there should be more disclosure. But aside from that, I mean, the idea that you have to protect the people who are on the Reddit boards, I think that's insane.
Hey, Katie, sharp moves in AMC, in companies, of course, like GameStop, Naked Brands, Express. Is this kind of the new normal for right now? Is this something that we're going to be coming back to every few weeks where we see spikes like this?
Well, I really hope not. But I think
I mean, it keeps you busy.
You want a life, right?
Yeah, it's job security, but yeah, I would like to go outside again one day. I mean, that remains to be seen. I think, the tone at the end of January when it felt like GameStop, AMC, BlackBerry kind of cooled down was, okay, that was an interesting moment in time. I'm happy we're past that. But I think the fact that we're seeing these crazy moves, especially in GameStop again, after a lot of those shorts have been squeezed out, is really taking a lot of people by surprise. So I don't have a good answer for you. It could be the new normal. I hope it's not, but we will see.
So, Joe, what was some of the advice that the folks you caught up with from your article 22 years ago have for the GameStop crowd?
Well, most of them said what you would expect them to say after they lose money in a frenzy, which is slow but steady. Slow and steady wins the race. That's not what people want to hear right now. The market's too excited. There's too much energy. The thing hasn't collapsed in on itself yet. But all the old nostrums is kind of where they came back to. It's like you threw it away. You said, I don't need that. That's not how the world works. And then it turns out that is how the world works. And they learned that the hard way by losing money.
Did anybody surprise you when you went back?
Yeah. The guy who lost the most was the one who never lost his taste for risk. I have to say that was pretty funny. He was like 25 years old. He had everything in a pre-IPO stock. The company was failed by the time he was allowed to sell it. And he said to me, well, that's one lesson. If you're going to be locked up, you ought to own the company.
Right.
And then he's now in Bitcoin and cryptocurrencies.
Well, speaking of Bitcoin, Katie Greifeld, we got to ask you because you moderated a panel. You wrapped up Bloomberg Live's Crypto Summit today. Any key takeaways? Kathy Wood was there. Tim and I caught up with her earlier this week on Bloomberg. Any key takeaways?
Well, the Kathy panel, of course, was the sort of the highlight of the show, and we all know Kathy's views on Bitcoin. She's very bullish, but she did say that she sees trillions in market cap potential for Bitcoin. So that definitely caught a lot of attention. And in terms of my panel, I was trying to get to the bottom of whether, it feels like the conversation has shifted from Bitcoin as a form of payment to a store of value. So we spent a lot of time there. Again, in my view, it feels like digital gold is now the new pitch for Bitcoin, but there are definitely a lot of bullish payment sentiment there too.
Hey, Joe, leaving you with the final thoughts here. Got 30 seconds. Bitcoin, what are you thinking about? And what are you hearing?
I am so the wrong person to ask that question. I mean, I see Joe Wiesenthal on Twitter on that all day long, all night long. It's like the last thing I'm ever going to do in my life is get Bitcoin.
Oh, my God.
But that's just me.
So no FOMO from Joe Nocera.
No FOMA, no Tina, no nothing. Listen, great stuff, guys. Thank you so much. Really appreciate it. Joe Nocera, check out his story, .com Survivors Have Wisdom for the GameStop Crowd. It's a great read, a lot of specifics, and just going back to those people during the stock bubble back in 1999. And Katie Greifeld, one of our go-to voices when it comes to the meme stop trade, GameStop, great stuff. Bloomberg News cross-asset reporter Katie Greifeld. Check her out. Check them both out on Twitter. You're listening to Bloomberg Business Week. Coming up, we've got the closing bell.
We've got the closing bell, yeah, and stocks are lower.
Yeah, they are, and just off their lows of the session. This is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 10-year Treasury yields reached the highest in a year. Tech leads a U.S. stock decline. The Dow, the S&P, NASDAQ all falling today. Folks from the Entrepreneurship Bootcamp Detroit ringing that closing bell. S&P 500 index down 96 points, a drop of 2.5%. The Dow down 561, down 1.4%. NASDAQ plunged 478 points, down 3.52%. Again, the S&P down 96, down 2.5% at the worst level of the day. The S&P have been down 111 points, lower by 2.8%. Tech shares leading a rout in stocks. The sell-off in global bonds deepened. Benchmark Treasury yields spiking to a one-year high. Debt from the UK to Australia coming under pressure again. The 10-year yield 1.52%. Gold down 1.9% today, $17.71 the ounce. West Texas Intermediate crude up 0.3%, $63.39 for a barrel of West Texas Intermediate crude. So a down day across the board for the Dow, the S&P, and NASDAQ. Diane Swank is a chief economist at Grant Thornton.
One thing I am worried about is the Fed has not discussed, although they're discussing it behind closed doors, they don't talk about asset price bubbles a lot out in public. And I think that's something we have to worry about, is how much is this just taking a little steam out of the overall financial market, and how much is it more of a bigger risk to perking what could be burgeoning bubbles out there.
And by the way, NASDAQ 100 sinking 3.6%, biggest drop since October. HP, while markets were trading, reported quarterly revenue and profit that topped analyst estimates, boosted by strong sales of PCs. HP shares up today by about 0.8%. Recapping, stocks lower, S&P down 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Master, Tim Stenovic in our Interactive Brokers studio. Charlie, of course, breaking down those closing numbers. Just finishing off our lows of the session. A headline, red sticky as we like to call it here at Bloomberg. NASDAQ 100 sinking 3.6%, the biggest drop since the month of October. S&P 500 overwhelmingly a risk-off trade today. No doubt about it. 45 names in the S&P 500 higher today, 458 lower, 2 unchanged, Tim.
Yeah, all of the groups in the red. Utilities down close to 1%. Healthcare among the best performers, but still down about 1%. Consumer staples down 1.1%. Then on the other side are the laggards. Consumer discretionary is down 3.6%. Information technology, not surprisingly, given what we saw on the NASDAQ, down 3.5%. Communication services down 2.56%.
Now, we talked earlier with Abigail Doolittle about just kind of how we're in this Netherland, if you will, a little bit between kind of earnings season. But let's not forget, we still are going to hear from Airbnb and DoorDash, their first earnings as publicly held companies. We're also going to hear from Salesforce and Shake Shack. HPQ already out. Charlie talked about them beating estimates on work-at-home PC demand, and we did see that come out before the market close, and that stock did, as he mentioned, finishing the day just up a hair, up about 0.75%. But, you know, this is where we continue to want to hear from companies, hear about visibility. If they're starting to put out forecasts, remember, for a long time, companies said, we're not going to give you a forecast because we have absolutely no visibility. And that has certainly changed over the last few months.
Yeah, that's certainly a key question that I anticipate we're going to hear analysts want from management at Airbnb especially. Hey, now that the vaccine rollout is continuing, it's picking up steam. The president today commemorating the 50 millionth shot given.
Yeah.
How is that changing your outlook for moving forward, even though we have seen Airbnb do very well during the pandemic as people have wanted to go places for long periods of time and away from where they work?
Right, exactly. And listen, they've got kind of a double whammy because they're dealing in a pandemic environment, but it's also their first financial results as publicly traded companies that they will come out with today. So we really get another deep dive into what the business is all about. And having said that, you know, the fourth quarter numbers will be important for investors really to gauge how the two are managing their operations with their, as you said, we're going to be looking for are those comments about the future. When coronavirus lockdowns ease, when vaccines become more widespread, all of those things that you just said are going to be certainly key in terms of what the company has to say and what it tells us about their business, but also more broadly about the economy.
So if you're just joining us, the S&P 500 down 2.54% today. The NASDAQ, though, sliding 3.5%, the lowest level in months, or the most significant decline, in months.
Listen, we've also got Beyond Meat coming across. Salesforce, though, out with their numbers. Fourth quarter adjusted EPS of $1.04 versus 66 cents year over year. Fourth quarter revenue, $5.82 billion. That's up 20% year over year. They're also talking about 2022 revenue, $25.65 billion to $25.75 billion. They had seen a range of $25.44 billion to $25.55 billion. So pretty much in line. Quick check on the stock in the after hours. If we take a look at Salesforce and how they're doing, that stock's right now up about 2.4%.
We're getting more insight from Airbnb right now. Airbnb fourth quarter revenue coming in above estimates, $859 million versus estimates of $739.7 million. So a huge beat there. Carol, you talked about visibility, a key question that you had for what Airbnb is looking for over the next quarter and this year. Airbnb says, quote, limited visibility for growth trends in 2021. The company also saying fourth quarter adjusted EBITDA loss of $21 million. That is a huge beat. Estimated loss was at $128.3 million.
And investors seem to like it. Stock's up about 2.9, almost 3%. We've seen it hit in the after hours trade. So investors certainly seem to be pleased. Keep in mind, this stock, it's one of the kind of, getting back to normal trade. It's up about 24% so far this year.
And to your point earlier, Carol, the company's saying that it's not providing a 2021 outlook.
No, exactly.
It's unclear at this time.
Yeah, listen, the visibility has got to be tough, especially for anybody, I think, in the hospitality industry. It's hard to kind of get an idea of how much people will come back when it comes to travel. Beyond Meat is down almost 5.4% here in the after hours. It, too, coming out with its latest quarterly results. They will also not be providing 2021 guidance until further notice. Fourth quarter net revenue, $101.9 million. The estimate was for $103.6, so that looks like a little bit of a miss there. Fourth quarter adjusted loss, 34 cents a share. The forecast was for a loss of 14 cents a share. So again, that is seen as certainly a little bit of a disappointment. As I said, stock is down here in the after hours. It's down just about now 7.25% in the after hours.
All right, and we're still waiting on DoorDash, set to report its first results as a publicly traded company in the next few minutes.
Yeah, as soon as they come out, we will cross and give them to you. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, mister!
Hey, Dave, what is your stock of the day today?
Arcosa, Tim. It's an industrial company with three main businesses. There's construction materials, energy equipment, and transportation products such as barges and rail car parts. Arcosa was spun off from rail car maker Trinity Industries in 2018. The ticker is ACA. The company's shares have gained more than 3 times as much as Trinity since the split. They set a record just yesterday before fourth quarter results were released. Now, Arcosa's report proved disappointing. Earnings trailed analyst average estimate in the Bloomberg survey for the first time since the spinoff. And while revenue beat projections, Arcosa's sales forecast for this year came up short. The company also predicted a drop in earnings before interest, taxes, depreciation, and amortization, also known as EBITDA, because of a coronavirus-driven slump in the barge business. The results and outlook sent the company's shares to their biggest loss since March, Arcosa falling almost 16% on the day.
All right, good stuff, Dave. Thank you so much. And meantime, Etsy also reporting their earnings after the closing bell. Stock, Tim, is up almost 5% in the after hours.
Wow, look at that. Slack saying that preliminary fourth quarter net new paid customer ads were 14,000, up 180% year over year as well.
All right, so we've gotten a bunch of earnings, and this is going to certainly carry us over into the Friday trade, everyone. You have a great evening.
Thank you. You too.
All right, see you in the morning. You are listening to Bloomberg Business Week. Back to World and National News, and back to Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden is commemorating the 50 millionth coronavirus vaccine shot, declaring, we're halfway there. He set a goal of 100 million doses in his first 100 days, but he says they're weeks ahead of reaching that goal. Biden says the more people get vaccinated, the faster we're going to beat the pandemic. But he did warn we still need to be vigilant since new variants are popping up.
I want to make something really very clear. This is not a time to relax. We must keep washing our hands, stay socially distanced, and for God's sake, wear a mask.
He says if an independent panel gives the okay to a Johnson & Johnson vaccine tomorrow, he will make sure it's rolled out as quickly as possible. He also reiterated that releasing that vaccine will be based totally on science and not on political pressure. Well, President Biden's $1.9 trillion stimulus plan is steadily making its way to a full House vote tomorrow. House Speaker Nancy Pelosi says there's broad support beyond Congress for this package.
Over 75% of American people support the legislation. Overwhelmingly, Democrats, Republicans, and independents support the legislation.
But Republican Congressman Andy Barr tells Bloomberg it is a fiscal blowout.
There's still over $1 trillion in funds unspent from prior bills. So one would think that we would focus on actually deploying the funds that we've already appropriated.
President Biden says he wants his critics to tell him what they think should be taken out. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's check in with Charlie Pellet for a business flash.
Hi, thank you very much. And here's what's going on. Let's begin with the market picture. 10-year Treasury yields reached the highest in a year. Tech led a stock rout today on Wall Street. Let's begin with the 10-year. The yield now 1.51%. S&P lower today by 96 points, down 2.5%. NASDAQ down 478, a drop there of 3.5%. NASDAQ 100 index down 3.6%, the most since October, as investors rotated away from pandemic-era winners toward companies poised to benefit from an end to lockdowns. The Dow down 559 points, down by about 1.75%. Again, the 10-year yield worth repeating, 1.51%. Gold down 1.9%, 1771 the ounce. West Texas Intermediate crude up 0.4%, 63.45 a barrel. After the bell, Airbnb reported revenue in the fourth quarter that blitzed analyst estimates, benefiting as people traveled over the holiday season despite rising COVID-19 cases, and highlighting how vacation home rentals are dominating the travel rebound. Airbnb shares after hours up now by about 4.6%. Recapping, 10-year yield 1.51%, S&P down 96, down 2.5%, NASDAQ down 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that. A lot going on today. Markets, as we mentioned, finishing off their lows of the day. A lot of selling, pretty broad-based, very broad-based. And then, of course, a lot of earnings, so getting some updates on some companies. We've also been watching, when you speak of companies, Huawei. It is China's largest technology company, once the world's biggest smartphone maker. It's a company that got caught in the crosswinds of U.S.-Chinese tensions in 2019 after the White House labeled it a national threat and later imposed a series of trading restrictions, banning U.S. companies from using taxpayer subsidies, to fund purchases of Huawei's 5G technology. You know the story. We covered it a lot. And those curbs, though, definitely had an impact on it. So let's get an update on the company, see what's going on. Back with us and delighted to have with us is Andy Purdy. He is Chief Security Officer at Huawei Technologies USA. He is on the phone from Washington, D.C. Andy, it is good to have you back with us. How are you?
I'm good. Thank you very much. We're healthy and happy, and fortunately, we're on the right side of the digital divide.
Well, tell us about that. I mean, and tell us what your world has been like as of late.
Well, I'm assuming you're asking in terms of the company.
Yes.
Personally, my wife and daughter and I are in the same house, and so we're kind of inspiring each other, which is great. But,
well, I'm interested in both. I'd like to know how everybody's doing.
Well, it's being on the right side of the digital divide. We just had like a 4 or 5 hour blackout for internet yesterday, and it was quite an impact on the three ways the three of us make a living. So we're very blessed, and I feel bad. There are an awful lot of people in this country and around the world that are on the wrong side of the digital divide, and I think our country and globally we've got to do a lot more to help people get connected, get the tools they need, and bring the undereducated and the underskilled up to speed. I think it's going to benefit the country and benefit the world. And we've also got to work on a future work strategy for this country so we can improve our current leadership over China in terms of information technology. And we can continue to grow our technology for the benefit of America and the rest of the world.
Well, Andy, I think many people wouldn't disagree with you. And I think for many, too, it was a staggering and maybe surprising reminder during the pandemic that it was like, what do you mean you don't have internet? And to see so many millions of Americans who did not have it, and it became such a necessity to work, to live, to keep your kids in school. What is the sensitivity, do you think, in the nation's capital to actually doing something significant? And is it really a policy thing, a government thing, or is it a private sector thing?
Well, I think it's both. I mean, I think the kind of collaboration that's necessary to roll out 5G in a country, for example, to make sure that all the money is not spent on spectrum, but to make sure that the co-location of the towers, to make sure that the business case for the different aspects of 5G enabled technologies, for example, healthcare enabled technology, the efficiency of manufacturing, but that takes government and private sector working together. Similarly, we have a lot of people that are uneducated, undereducated. We saw a lot of them when there were shutdowns around the country and around the world. They would lose their jobs, and they're living kind of at the margin, at the low end. As we move into what 5G is going to mean in the next 3 to 10 years, in terms of lower latency, the speed, the multiple connections, and the ability to really enable bringing computing power to the edge is going to enable certain technologies. But we've got to make sure that our workforce, we've got people that are studying, we've got people that are underemployed, we've got to bring them skills, and I think we've learned a whole lot about virtual education and virtual training. We need to expand that so a lot more Americans, particularly in those pockets of poverty, the location-based poverty that has been intergenerational poverty in this country, where people were not even before the pandemic. As unemployment came down, as the number of people employed went up, pockets of poverty in this country were unaffected. And we saw some of the folks affected by globalization. We have to learn lessons. We have to develop a public-private strategy. It's got to be federal, but it's got to be private sector, and it's got to be our counties, our communities. We owe it to the people of this country to help people have a chance for a better life. Folks can fight over minimum wage, but we need to give people the skills so they have a chance to compete. And we have to say what's going to be necessary for the workforce, for automation, robotics, big data analytics, and artificial intelligence. We've got to start training our workforce, and it's got to be led by the private sector, but the government has to help.
Andy, hang on for a second. I just want to bring a couple headlines to our audience. AT&T agreeing to sell its stake in its DirecTV service to TPG. This certainly has been out there. We've been covering it here at Bloomberg, so that just crossing. And DoorDash also out with its latest earnings. Fourth quarter revenue, it's $970 million versus an estimate of $926.7. Fourth quarter loss per share, $267, and a quick check on the stock in the after hours. In terms of that trade, it is trading aftermarket down about 8%, so moving big time. Hey, Andy, listen, I'm talking with Andy Purdy, Chief Security Officer at Huawei Technologies USA, on the phone from the nation's capital. You were a member of the White House team. You've developed, when it came to security and cyberspace concerns. But, tell me right now, you understand inner workings of a White House. You've got a White House with a really full plate in terms of getting the virus under control, getting the economy back on track, and really and dealing with climate change. So how does something like making sure the underskilled have the skills that are necessary and for the types of jobs that are going to be demanded, where will that likely stack up? Because you understand that sometimes when you get a full plate, something's going to be forgotten.
I'm hoping that someone like Jill Biden, who's an educator herself, can help lead some of the organizations that have recognized the problem. And we have to have something that can be bipartisan. So the American Enterprise Institute and Brookings did a major study on poverty that was released in 2015. They identified the location-based poverty problem, that bringing those kinds of folks together to say, okay, these are the requirements, these are the capabilities that we need to do, we could start a path forward to help those folks. And then at the end of those people that have some skills, we need to make sure that we have identified what are the skills that are really necessary for the new technologies that 5G is going to enable. And I haven't seen that strategy, and I think the private sector ought to lead that.
Yeah, interesting. Well, let's talk about, technology and your business specifically. We talked about, certainly how Huawei got caught up in the past administration between the U.S. and Chinese and tensions there. Talk to me about chip supply, because this is something that we've been covering a lot of concerns about, shortages in semiconductors, as we know, needed in everything. Your chip supply situation with increased sanctions, how can you keep your core businesses running, and if so, for how long?
Well, we are impacted, and there's been consequences in Europe and elsewhere around the world, causing, as you know, a general undersupply of chips, such as in the auto industry. We are hurting. We took quite a hit because of the limitations on the ability of the American semiconductor industry to sell to us. Took a big hit in 2019. We had quite an impact in 2020, although we did, as you may know, we just announced that we've got positive earnings and profit for 2020, which is pretty extraordinary. But we're going to be hurt again in 2021. We are hoping that in the interest of the American semiconductor industry, we're hoping that they can convince the Biden administration that what we and others want to buy are not the highest end, or not national security significant chips. And we spent on average $12 billion a year in procurements from the semiconductor industry. We spiked up to $18 billion in 2019, but $12 billion a year is about 40,000 American jobs. That's not a question of benefiting Huawei. That's a question of benefiting those American companies. They need it for their financial well-being. They need it for their ability to do research and development, and they directly support the U.S. defense industrial base. So hopefully, in the interest of the United States, decisions will be made that stuff can be sold to us and others.
No, I understand, but do you think, with the chip supply situation and the increased sanctions, that you can keep your core businesses running?
We can keep our core businesses running. We stockpiled, as you know, particularly in 2019, but we also stockpiled more in 2020. It's difficult. We have to prioritize certain products over others because we can't maintain the supply. It certainly had an impact. We're trying to fully build out our operating system, as you know, for our mobile devices, including the one we're using in the new phone. It's going to be a struggle. We can't say when we're going to be able to turn the corner to the kind of revenue growth, the kind of profitability that we would have expected otherwise. But we're pursuing other business lines. We are going to be around. We are going to survive. We're here for the long haul.
So you're not worried about the core businesses? Like, there's a point, you're looking 2 months, 3 months, 6 months, where you say, like, we could run out.
We are hurting, and we expect to hurt for the foreseeable future.
Okay.
Hopefully the leadership is going to announce, I guess we're just about in March, the exact numbers. And as they did last year, I hope that they will give quite a bit of detail on the situation that can go into detail exactly about what you're talking about, to give us some idea of if, when, and how, in terms of what products we might run out. It's definitely a very dire situation, no question.
You sound hopeful, though, or fingers crossed, in terms of the Biden administration. Is there a definitive or specific sense that the change in administration here in the U.S. will help change the atmosphere for Huawei?
Well, to be perfectly honest with you, I'm much less concerned about changing the atmosphere for Huawei as I am about America trying to improve its competitiveness. You saw President Biden sign an executive order yesterday, the day before, to help the American semiconductor industry and help the supply chain issue. That's very, very good sign that the administration is not just thinking about blocking Huawei. They're thinking about what's necessary to help America improve. And hopefully, as they focus on that, and remember, one of the major things happening, Ann Neuberger with the National Security Council, is looking into the major cyber attacks that happened recently. So America is going to increase their preparedness for cybersecurity attacks to improve our defenses, which coincidentally is critically important because these 5G-enabled technologies, we're all going to become very dependent on it. So cybersecurity is going to be much more important than it ever was before. So my concern is America and American competitiveness, and I really think American jobs are on the line, and I hope those can be saved. And yes, that will tangentially help Huawei, but I'm really thinking about it in terms of the American worker.
No, and I appreciate that, and you really looking at the United States as well as the world at large. Hey, one last question I think we have time for. We catch up with various analysts who cover you guys, and one of the questions that came up was, how you expect 5G, you talked about it, to positively impact infrastructure sales for you guys. Is that a big one? And just got about 40 seconds left here.
Well, right now, the pressure from the last administration with the Open Network Initiative was putting pressure on countries around the world to block our sales. So that's definitely had an impact on our sales. So Germany and the European Union are trying to come up with ways to address the risk that I think will be quite informative for the U.S. government And I think some of those systems are going to be quite effective. And so I think countries are going to feel like, okay, we can protect the security interests the U.S. is concerned about. So we're going to buy Huawei stuff, or we're going to allow Huawei to compete so we can get the benefits for our people.
All right, we got to run. Hey, Andy, thank you so much. Really appreciate it, and talking about some really important issues. Andy Purdy, he is Chief Security Officer at Huawei Technologies USA, joining us on this Thursday from the nation's capital. You are listening to Bloomberg Business Week. Just a reminder of where we finished on this Thursday trading day. We finished just off our lows, but still down on the Dow Jones Industrial Average by about 1.8%, down 2.5%, and down 3.5% on the NASDAQ.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Got to say, a lot going on this week, but I still can't get out of my mind Tiger Woods and the car crash. And of course, we're all wishing him really well. There's an interesting story by our Jerry Smith on the Bloomberg about what it means to the industry that he's so defined. So we're going to talk about that in just a moment. First up, though, let's get back to your top business stories. A lot of news, a lot of earnings after the close. Hey, Charlie.
Indeed, we're all over those reports. First of all, let's begin with Airbnb. It reported revenue in the fourth quarter that blitzed analyst estimates, benefiting as people traveled over the holiday season, despite rising COVID-19 cases, and highlighting how vacation home rentals are dominating the travel rebound. Airbnb up by 4% after hours. Beyond Meat is jumping after announcing strategic tie-ups with two of the largest fast food companies in the world, McDonald's and Yum Brands. Shares of Beyond Meat up by 4.5%. After the bell, Dell Technologies reported quarterly revenue that topped analyst estimates, bolstered by continued strong demand for PCs needed for work and study from home. And AT&T has agreed to sell a 30% stake in its DirecTV service and other pay TV operations to private equity firm TPG in a deal that the company said values the business at $16.25 billion. Tech shares led a rout in stocks today, with the sell-off in global bonds deepening. The benchmark Treasury yield spiking to a one-year high. 10-year now at 1.48%. S&P down 96, a drop of 2.5%. The Dow down 559, down 1.25%. Nasdaq down 428, a drop of 3.5%. Gold down 1.7%, 1773 the ounce. West Texas Intermediate crude up 0.2%, 63.32 a barrel. Well, what about equity markets and rising bond yields? Savita Subramanian is head of U.S. equity and quantitative strategy at BofA Securities.
3% is where you want to start really worrying. That's where asset allocators are likely to really meaningfully shift back to fixed income investments. So we've got a ways to go, and we're still in an environment that is relatively attractive for long duration stocks and for equities overall. But I think when we get to, a 3 handle on the 10-year, that's where a lot of our indicators suggest that stocks could feel a little bit of pain.
And today, the handle on the 10-year, 1.48%. S&P again recapping down 96, a drop of 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As I mentioned, a really big story this week, the car crash that severely injured Tiger Woods. It really shocked the sports world, shocked the world at large, really. And as I said, we are all wishing him a speedy recovery. The accident really is going to affect the industry that he really helped build and define. So this story is, or I should say that story, addressed in one written by Bloomberg News media reporter Jerry Smith. He's with us on the phone in New York City. Jerry, good to have you here with us. I'm glad we could talk about this because, first and foremost, we wish Tiger well.
Right. Obviously, everyone's hoping that he is able to, recover from the injuries from this what looks like a really devastating car crash.
Yeah, and I do wonder though, from someone who grew up watching golf, my dad played it, my brothers play it. Jack Nicklaus, Arnie Palmer, like all these people, like Tiger Woods is somebody who really kind of reinvigorated the game.
That's right. If you think back, he turned pro in 1996, and he won the Masters in 1997, and winning that tournament, it really changed the game. It brought so many people into the game who had never, really followed the sport. And over the next decade or so, he really dominated. He was by far the best player. There really wasn't anyone who was close to competing with him. And, there was a lot of talk, at least in the early days of his career, where, his personal story, his father was African-American, his mother was of Asian descent. It was, a lot of people had hoped that it would bring people of different races into the game. And that has not really proven to be true, but he is still, he was such a big draw, and he really still was a big draw of the game. But he just really dealt with a lot over the last decade, a lot of injuries with his back and a lot of surgeries. Obviously is well publicized, marital infidelities, and he really wasn't the player in the last couple of years that he had been. But I think there was a lot of people who were hoping he could still find his game, and certainly his sponsors and the TV networks were hoping for that as well.
Right, and there's a lot of them, and I want to get into it. I have to say, though, my co-host Tim Stanovic, who has worked with you before, reminded me how much you love golf and have closely followed it. I think he said that even mentioned that, I guess when you guys worked together before, that you kind of would watch golf at work. So hope I'm not like calling you out on anything. But no, you love the game, you know it. When you heard about Tiger, and the accident, what was the first thing that came to mind?
I mean, obviously, concerns for whether he would survive the crash, and also as a fan of the sport, I was disappointed. I think a lot of people, and Tiger himself, just said last weekend he was still holding out hope that he was going to compete in the Masters in April. And, his back had been bothering him, but he thought he might play. And that would have been, the TV viewership, CBS broadcast the weekend of the Masters. I mean, the viewership, if Tiger had played in the Masters and potentially competed and won again like he did in 2019, I mean, the ratings for that would be through the roof. So I think just, as a fan of the game, I was disappointed that he is going to be sidelined for quite a while, if not his entire career.
And you mentioned, listen, we are Bloomberg. There's a business aspect to it. I mean, Discovery was working with Woods, right? They recently bought Golf Digest magazine, and they were working on content together. I mean, this really has to be restructured. Just got about 45 seconds left.
Yeah, that's right. Discovery has a streaming service called Golf TV where he was giving lessons as part of that. He has sponsors like Nike, TaylorMade, Bridgestone that are not going to be able to capitalize on him, competing in tournaments for the foreseeable future. So, his sponsors are expected to stick with him. But it's really a big question mark whether he ever plays tournament golf again.
And even though there's like some younger, great stars out there, there's no one who's quite stepped up to the plate like Tiger has he? Just quickly.
Yeah, I mean, there's, Brooks Koepka, Bryson DeChambeau. I mean, there's a lot of young stars that are getting more attention now, but, I don't think anybody is going to get the same kind of star power that Tiger Woods did.
Well, we certainly, as you said, we all wish him well and a speedy recovery. Jerry, thank you so much. Appreciate it. Jerry Smith, media reporter at Bloomberg News. Check out his work at Jerry F. Smith on Twitter and also, of course, on the Bloomberg Terminal and at Bloomberg.com. All right, let's get another check on world and national news. Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Former President Donald Trump's tax records are now in the hands of New York City prosecutors. Bloomberg's Nathan Hager has more.
A spokesman for Manhattan District Attorney Cyrus Vance's office says prosecutors enforced a subpoena on former President Trump's accounting firm within hours of the Supreme Court rejecting his last-ditch effort to block it. The documents are protected by grand jury secrecy rules and are not expected to be made public, but Vance has been pursuing 8 years of the former president's records for the last year and a half. Prosecutors have indicated they're looking into possible tax and insurance fraud charges as well as falsification of business records. In Washington, I'm Nathan Hager, Bloomberg Radio.
Lawmakers have been posing more questions today to top U.S. Capitol security officials concerning the January 6th attack on the Capitol. Congressman Tim Ryan expressed his frustrations.
How could the security planning, policies, and procedures apparently be so lacking and ill-prepared?
Acting Capitol Police Chief Yogananda Pittman admits there were a lot of missteps.
The Capitol lockdown was not properly executed.
Some of the officers were unsure of when to use lethal force.
She says the department is now holding daily calls with its intelligence partners to prevent any future attacks. Former Michigan Governor Jennifer Granholm has won Senate confirmation to be President Biden's energy secretary. She served 2 terms as governor in a state that's dominated by the auto industry. In the cabinet, she'll be a key player in Biden's vision for a green economy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. I'm Carol Massar. Joining me once again is Charlie Pellet of Bloomberg News. And Charlie, I'm watching DoorDash in the after hours. This is the first report for the company, financial quarterly update, since it went public, and the stock is down more than 12% here in the after hours.
Indeed, one of 2 very closely watched reports, because also falling into that category was Airbnb. Same situation, first report as a publicly traded company. But here's what investors are focusing on after hours, and that is the losses. They more than doubled from a year earlier. An actual, Carol, as I pull up the GIP after our screen on the Bloomberg now, down 16.91% on shares of DoorDash. So certainly a lot of people focusing on those losses. However, it did report fourth quarter revenue that actually beat analyst estimates, reflecting a surge in COVID-19 cases and restrictions that fueled demand for food delivery at the end of last year.
Yeah, sales, listen to this. Sales increased 225% in the 3 months ending December 31st from the year before, totaling $970 million. Analysts had projected $926.7 million, so that was a beat. Customers placing 273 million orders in the period. That was a 233% increase. Gross value of those orders at $8.2 billion. But as you said, the loss, reporting a net loss of $312 million, widening from $134 million a year earlier. So a big loss. I mean, that's kind of rough.
Indeed, but also, too, another nugget in this report here, DoorDash expanding its market share to surpass 50% of the United States last month, that up from 35% in January of 2020. Also a strong presence in the suburbs, helping the company weather the lockdowns better than some of its rivals as many Americans fled from cities.
Listen, the big question at this point, Charlie, is does this continue? Do people continue to want to have food delivered, or are they going to be going out to restaurants? We're going to get an update on that in just a moment. We check in with the editor of Bon Appetit. But, do these trends, these pandemic trends continue? It's a really, really, really big question. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. DoorDash shares plunging after hours, down 17%, while it reported fourth quarter revenue that beat analyst estimates, reflecting a surge in COVID-19 cases and restrictions that fueled demand for food delivery at the end of last year. Its losses also more than doubled from a year earlier. Also reporting after the close of trading, Airbnb, it's out with revenue that blitzed analyst estimates, benefiting as people traveled over the holiday season despite rising COVID-19 cases. Tech shares led a rout in U.S. stocks today. The benchmark 10-year Treasury yield spiking to a one-year high. The 10-year 1.53% on the yield. S&P down 96 today, a drop of 2.5%. The Dow plunged 559 points, down 1.75%. NASDAQ down 478, a drop of 3.5%. Gold down 1.9%, $17.70 the ounce. West Texas Intermediate crude up 0.2%, $63.34 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. So let's wrap up today with a look at the food industry, restaurants. It's an industry that we know disproportionately has been impacted by the COVID-19 pandemic and economic shutdown. We've talked with a lot of chefs here at Bloomberg Business Week, from Danielle Ballou, Eric Repair, you name it, Daniel Hume. So let's get into it with Dawn Davis. She is editor of the multimedia food journalism outlet. We're talking about Bon Appetit, and she joins us on the phone in New York City. Dawn, nice to have you here. How are you?
Carol, hi. Nice to be here. Thanks for having me.
You bet. And great to have you here. Before we get to the big picture about what's going on in the food industry, I've got to ask you about coming into a company that was, like everyone, dealing with the pandemic, dealing with the shutdown, and then your company had another layer of stress internally over racism on several levels that led to your predecessor resigning. You had Black editorial staff members resigning. So tell me about kind of what your world has been like since you took over the job. You were named in late summer. So tell me a little bit about what it's been like.
Named in late summer, I came to Bon Appetit, actually started in November, so I've been here a little bit more than 3 months. And honestly, there was nowhere to go but up, because they had hit a low as they kind of reckoned with their kind of racial, cultural past. And we have a team that's committed to, providing recipes and providing a service to the people who need us during the pandemic, where we're all cooking more. I feel that the people who've stayed are really committed, and I hopefully am creating an environment where people feel free to, talk openly about what's going on, and just putting out a really good product. My first issue came out in March.
I've got it in my hands.
About that. I feel like it reflects a diversity of perspective, diversity of tastes. There's something for everyone in terms of accessibility, in terms of an advanced cook, a beginning cook, and different tastes. So we are cohering as a team.
Well, that is so interesting. I heard you say diversity several times in terms of how you are covering things in the magazine. Like, in terms of getting around racism within the corporate culture, whether it's yours, anywhere, whether it's in society, we really need to approach everything with diversity.
I think diversity from different perspectives, even age diversity, we're better when we have different people from different generations and different perspectives giving feedback. And so I think the product is different. Also, I did a story about essential workers. It's called The Hands That Feed Us. And even having a trained chef, but who chooses to work at a cafeteria and at a church, she's never been in a magazine like Bon Appetit. So that is a diversity of perspective. And obviously, we have ethnic and cultural diversity in our pages. We have a Filipinx chef from Seattle who runs a wonderful restaurant called Mustang. So we're trying to shake it up, but always keep it fresh and always about the food at the same time. That's been the challenge. People want diversity, but they also want recipes that they can use to feed their family, to comfort their family, and while we're Zooming and everything else that are kind of relatively accessible.
Yeah, it's interesting. So I'm assuming your approach is going to continue this way of just thinking about, when you think about the food space, the restaurant space, all of it is a diverse world, right? It's people who come from other countries and open up a restaurant. They bring their culture with them, their food with them. I mean, that's what it's all about.
that's what makes it so exciting. You know, I had the good fortune before I was a book editor for many years, and thought briefly about with friends, maybe we should open up a restaurant one day. It was just a fantasy. And someone said, you know, before you do that, you have to talk to this guy named Anthony Bourdain. And I had the good fortune of befriending him. And one of the things he loved was just how diverse and interesting the kitchens were. And I got to work with him every Friday for a couple of months. And it's true, people from all walks of life, all different kinds of backgrounds, some lots of culinary experience, some none at all, different continents. It was beautiful. I loved it.
Well, is there something about food in particular? I always think about that. I'm from a large family. Dinner was a big deal for us. We sat around the table. When we had company, we just pulled up another chair, and it was just this wonderful experience. But I do think about how food can help us maybe cross some of those divides that are so systemic in our society.
Absolutely. I think it's how we get to know each other. You know, it's how we extend friendship, and, you know, it's how we flirt with each other. It's how we comfort each other. I mean, I think one of the hardest things about the whole pandemic is not, you know, when something goes wrong, not being able to walk over, a dish that you're so proud of and that you know will kind of provide some comfort. So absolutely. Food brings us together.
Yeah, no doubt about it. So tell me about the restaurant industry. They have definitely come together, supported frontline workers, done so much. It's been an industry, though, as I said at the top, disproportionately impacted because of the pandemic and the shutdown. What's the way back? What are you hearing from folks in the food and restaurant space?
Well, they've all had to be incredibly innovative. I'm sure you've reported 1 in 4 jobs lost in the pandemic belong in the food and beverage space. They've, created pantries where they sell olive oil or salt. They've extended their takeout and made it much more robust. And I don't know that we're ever going to go, we're going to turn away from that. The outdoor dining, particularly in New York, where I live, has just been really kind of electric. Everything from teepees and tents to structures with lots of heat. But it's been hard for them, and I think that they're going to have to just remain creative. We're all hoping that the restaurant relief bill will provide the relief that they need. And without that, it's going to be pretty bleak.
I mean, it's been I think many people would argue that, kind of shocking how much the restaurant industry was left behind.
It's incredible. I mean, I know it makes New York, restaurants, theater, museums. And the idea that they weren't, given more relief is incredible. But hopefully this will give them some structure like the airline industry. So going forward in terms of emergencies, they have access to emergency funds.
Hey, listen, I do and just one last question. Will there be a more cautious approach, do you think, to kind of restaurants reopening or new places coming online because of what happened in the past year? What are you hearing, just quickly?
I think a lot of them are investing in their outdoor services so that they, we know 9,700 restaurants in New York City applied for and got outdoor permits. So, and I know Vestry, a great new restaurant that opened in the middle of the pandemic, they invested heavily, tens of thousands of dollars in a heater system so that they could provide seating outdoors and that you could be comfortable. I think making sure that they have, their own delivery service so that they can not have to pay the middleman so much for the delivery charges will be helpful for them. And I think really paring down a takeout menu and a meal kit service that some of them have done so that, their customers can get their favorites and kind of going to that hybrid model where they're hopefully going to come back full roar with the whole in-dining experience, but also have a robust takeout experience.
Yeah, they have just pivoted. It's just been amazing. Dawn Davis, thank you so much, editor of Bon Appetit magazine, joining us. Hey, coming up next, Sound On with Kevin Cirilli. Mr. Cirilli, what do you got?
Senator Marsha Blackburn. She was actually with President Biden in the Oval Office. She's a Republican, yes. They were talking about diversifying supply chains from China. And I've got Obama CIA Chief of Staff, Jeremy Bash.
Great
Lots
show.
to talk about.
Yeah, grab a glass of wine and listen, everybody. Good stuff. Kevin Cirilli with Sound On, coming your way.